It's time for Twit This Week in Tech. There is big news, but I've got a big panel to talk about it. Joining us from Semaphore.com, Reed Albergati, Lisa Schmeiser from NoJitter.com, Glenn Fleischman from Glenn.fun. We'll be talking about the Silicon Valley Bank collapse, and I think there's good news coming. We'll have that for you. We'll also get an inside look at the end of the show. Jason Calacanis is going to drop by. He couldn't be on the full panel, but he's going to give us what it looked like from the inside last week. We'll also talk about a Canadian law that may kick Meta out and why AM radio is no longer going to be in the Ford Mustang. It's all coming up next on Twit.
Podcasts you love.
From people you trust.
This is Twit.
This is Twit. This Week in Tech, episode 918, recorded Sunday, March 12th, 2023. Rational minds have prevailed. This Week in Tech is brought to you by ZipRecruiter. One of the biggest 2023 hiring challenges is standing out to top talent. Break through the clutter and attract the most qualified candidates for your team with ZipRecruiter's matching technology. Try it free at ZipRecruiter.com/twit. And by Bitwarden. Get the password manager that offers a robust and cost-effective solution that drastically increases your chances of staying safe online. Get started with a free trial of a Teams or Enterprise plan, or get started for free across all devices as an individual user at bitwarden.com/twit. And by Collide. Collide is a device trust solution that ensures that if a device isn't secure, it can't access your apps. It's zero trust for Okta. Visit collide.com/twit and book a demo today. It's time for Twit This Week in Tech, the show we cover the Silicon Valley Bank collapse. And maybe we'll do some other news, too. We have a very good panel for this. I'm thrilled to have Glenn Fleischman, our good friend, all the way up from Seattle, and very successful Kickstarter operator. We'll talk about that in a bit. The book Shift Happens has done its run and is going, man. Hi, Glenn.
Hello. How are you doing?
Good to see you.
Leo?
Great.
Doing great.
Thanks for joining us. Your good friend,
Pleasure.
Lisa Schmeiser's sitting to my left.
Well, hi.
How do you guys know each other?
We've podcasted before together on The Incomparable.
Oh, The Incomparable.
And our circles have overlapped at Macworld and a few other publications.
It's 6 degrees of Jason Snell everywhere I go.
Yeah.
I have a great story. I can save it, but I have a great story about knowing
Oh, you
Lisa
should
and her
totally tell the
husband.
story. It's a really good one.
Save it.
So
Save it.
I'll save it later in the show.
Save it.
Well,
Save
how
it.
do Lisa and her husband?
Lisa is at nojitter.com. New for you. What is No Jitter?
So No Jitter, we own the communications technology stack all the way down from POTS, POTS, plain old telephony services, up to collaboration and communication applications, which include the workspaces we're all used to, like Teams and Slack and Zoom, but it also branches out into customer service, customer experience, and call centers. So I cover everything.
You cover a lot. Yeah.
We do. Well, the name No Jitter goes back to the old school days of telephony, when the biggest concern you had was about sound quality on your networks and whether or not you'd have jitter in your audio.
We still care. Zoom.
Yeah.
Zoom, we can see what the jitter is.
Yeah.
We try to keep the jitter down.
And I'm thrilled to report I've got a contributor who just turned in a piece I'll be editing, talking about the emerging issue of sound quality across collaborative platforms, because you have a lot of folks who are using internet telephony and don't realize it doesn't have to sound like you're talking from the bottom of a fishbowl. So
I think we sound pretty good. We're using Zoom, but we use a special version of Zoom that Andy Carluccio created. Zoom then acquired his company called Zoom ISO, that we're all in one call, but we're all ISO'd. And it really, I think it works really well for us. Latency is very low. I want to welcome Reed Albergati for the first time to this show. He's been on Twit many times, of course. Now at Semaphore, technology editor at Semaphore. Hi, Reed.
Hi, how you doing? Great to be
Very
on.
well. I love Semaphore. I've been reading it religiously. It was such a big mystery for like almost a whole year what these guys were going to do. And turns out they did something pretty darn good. I'm glad
you like it.
Yeah. And I'm glad you're there.
We're having a lot of fun.
Yeah.
Yeah.
We know Reed from, of course, the Wall Street Journal and The Information. Now he works for the Smiths. And
That's right.
And
right.
and the reason you're on, it was kind of a last minute booking, and I appreciate your doing that for us, is because of the Silicon Valley bank collapse. I wanted to get somebody. You've been covering it for Semaphore, so
yeah.
Actually, I guess you probably all have an opinion in this. Yeah. All right, we'll get to it. I will say. I was vetoed, but I tried to get Jason Calacanis on, and I was vetoed. Kevin Rose, unfortunately, is in an airplane. I thought he'd be good. I want to get somebody with a venture capital background. And also O'Malley, who has not only got a venture capital background, but is a man of the people, wrote a very good piece on his blog, ohm.co. In fact, let me just kick it off with a little bit of what Ohm wrote, because I think he is probably he's a very thoughtful guy with a foot in every bit of camp for this, and actually he's got a new post. So I want to go back to his.
There's been some news out just a couple hours ago.
He's writing a lot, because Janet Yellen was on the Sunday shows.
Mm-hmm. Yeah.
So, which saying, by the way, nothing. His piece that I was thinking of is from yesterday. It's called "A Tough Weekend." Mm-hmm. And
you could not have picked a more beautiful header image, by the way.
Yeah,
that's amazing.
Yeah, except for the Salesforce Tower, it's really gorgeous. That's San Francisco.
Oh my! Are we going to bag on that this week?
Yeah,
too? Is that part of it? We're going to go on
I think I blame the whole SVB thing on Salesforce Tower. To be honest, after Ohm writes, after 3 decades of being part of the Silicon Valley ecosystem as a reporter, writer, entrepreneur, and investor, I thought I'd seen it all. The boom bust cycles, stock market manias, startup insanity, attack on America itself, and the most significant financial calamity in nearly a century. He's probably talking about 2008, I would guess. Living through history prepares you for every eventuality. Your own struggle with mortality. This is what I love about Ohm. As he's aged a little bit, he's thinking about things like that. Your own struggle with mortality prepares you for the unpredictability of everything. You embrace the impermanence and become one with it. And yet, despite all that, you experience what Silicon Valley has experienced this weekend. A sense of helplessness, a feeling of dread, and more importantly, a sadness about the fragility of our community. What happened Thursday, Lisa Schmeiser? Can you synopsize this?
Let me see if I can try. And I want to encourage everybody else to jump in on the details I'm either aligning or getting wrong. I believe this was kickstarted by Silicon Valley Bank messaging that they were not quite as they had pumped a lot of money into their bonds, sold the bonds, they're short on money, they need more money, and that in turn prompted a bank run.
By the way, not a good thing for a bank to say. I'm just saying maybe they could have worded that a little differently.
Yeah.
The problem, Silicon Valley
Friday,
Bank, which is the number 18 bank in the nation, with many billions of dollars in customers, was the chief bank for many venture capital firms, startup firms, venture capital funded firms. And the problem with that is startups that are funded by VC are not like you and me. They get a pile of cash at the beginning, which they then put in the bank. They don't need loans. Normally, a bank, the kind of bank you and I bank at, we give them our pitiful little paychecks and then borrow money from them to buy a house. Or a car.
To interject from it, one of the reasons this has turned into a problem is because the banking protections that are in place cover bank customers for deposits, which is, i.e., the pile of money you just talked about, deposits of up to $250,000. But if you are a startup that got a big cash infusion, you have more than $250,000 in the bank, and you're drawing against that for payroll and operations.
So they were using it as a holding, but they weren't borrowing money. So SVB was in this difficult position where they had a lot of cash, and of course you can't just sit on it. You have to invest it. And they made, what I think in hindsight wasn't such a big mistake. They bought T-bonds. They bought Treasury bonds, which are very low risk, but also very low interest. And then the Fed raised interest rates.
There was a really good thread on Friday saying it's not that the bank operated poorly or was a poor steward of money. It's that the messaging that they put out around here's why we need to raise more money sparked a bit of a panicky overreaction.
They had the last year to unwind some decisions that were perfectly reasonable, and they did not. And they were afraid, I don't know, they're trying to protect their position, but it put them in a place where when they hit the crunch, there was no buffer at all, because they could have slowly unwound things. They could have sold assets off. They could have taken a small hit. They could have been quietly raising money. So when it hit, no one was quite expecting it, except I think the Financial Times called it like 2 weeks early. They had looked at where they were exposed and said, hey, this looks like they're in kind of a bad position. It could get worse, but obviously didn't call the bank run. And I've read a few places too. If this were a normal bank, if it didn't have customers who were absurdly plugged in and with lots of very large amounts of cash that have to be used immediately for salaries, that there wouldn't have been a run, because a normal retail bank, even if you had customers with millions or tens of millions or hundreds of millions of dollars in some accounts, would not have pushed so hard to get the money out so fast.
Well,
so
a bank run happens when
there's
customers panic.
Go ahead, Reed.
Yeah.
I mean, there's one thing I'd add to that. I mean, I think you're right, but I think they also had something like 96 or 98% of their customers were over the 250K FDIC threshold. So I think that played into it as well. I mean, they're one of the, I think, like the second most customers over that threshold.
They were a Silicon Valley.
Well, to add
bank.
to what Reed is saying, typically, and there was a really good question in the Discord saying, if your bank account only protects up to $250,000 and you have more than that, why wouldn't you have multiple protected accounts? You actually have the option in banks to structure your money in tranches of $250,000. However, your bank has to offer that as an option, and it has to be something that you choose as a customer to do, and it's unclear whether Silicon Valley Bank didn't offer that option or whether customers chose not to take it. But the upshot was that kind of protection for each of your $250,000. I say like we all have lots. There's the option to protect each of your $250,000, and for whatever reason, either the customers did not know this option was available, or the bank did not offer this option because it's not required. It's something it's a business feature.
You wouldn't expect a startup that just got $100 million in venture funds to divide that up amongst 40 banks of $250,000 each.
It's a product. It's a product. It's called, I just heard about this today. Yeah. It's called Insured Cash Sweep, and there are hundreds of banks that participate. So it's actually something that some companies do, and we don't know if
SVB offered that.
Yeah, it doesn't seem like, from what we're saying. I mean,
sounds like
Roku,
they didn't.
Yeah. With Roku has hundreds of millions of dollars that are tied up, but out of a larger cash stash, they made clear what they have, on hand. But it's something that some companies do, but it's also, I think at the outset, there's this notion, this is kind of like when people talk about the Social Security Fund and it's going bankrupt or insolvent. And it's like, well, it means at some point, between when Leo is ready to retire and I'm ready to retire, to give you the range.
That's a large range, by the way.
I don't know how large that is. They might be unable to pay 100% of promised benefits. Doesn't mean Social Security Fund is out. And the same thing, Silicon Valley Bank has, I don't know, I don't think they have an estimate at the moment, but it has substantial assets that are tied up in an illiquid short-term format. And there's every chance the FDIC has already, the deadline was 11 a.m. Pacific for bids from other banks. They may already have accepted a bid from another bank to make all depositors whole. This is a very possible outcome. And
usually,
this will all be resolved.
Usually, though, it would be, and Reed and you and Liz Hoffman had the story on Semaphore. Hedge funds are also offering 50, 60 cents on the dollar for these bad assets.
So is there
even if a bank? But let's finish the chronology, because we haven't said yet what happened. Yeah. So when did SVB put out this advisory? Wednesday?
Oh gosh, I want to say when was it Wednesday? It was an evening.
Yeah, it was Wednesday.
Because the bank run began on Thursday.
So the next thing that happened, though, that was perhaps salient, is that Peter Thiel's Founders Fund, venture capital company, put out a notice to its startups that they thought they should withdraw their money from SVB, that SVB was unstable. And because, Reed, maybe you could pick it up there. What happened when Thiel put that note out?
I mean, I would say by the time Thiel put that note out, there were a lot of VCs.
It was already in the air.
Saying this.
Okay.
Yeah. In fact, I mean, and I would just say, as an aside, I mean, there were firms that were really on top of this and had been taking their money out months and months ago because they sort of saw this coming. I think everybody else kind of just trusted that, it's Silicon Valley Bank. It's going to be fine. But I think what we started to hear, the Liz Hoffman and I and other people heard like early Thursday that VCs were kind of like whispering like, hey, I think you might want to take your money out of Silicon Valley Bank. It's looking sort of bad. And then I saw email exchanges on Thursday morning where, people would recommend this, and then lawyers, whoever, would sort of respond and say, this is irresponsible. You shouldn't be sending, these messages out because, it's sort of this self-fulfilling prophecy. And I think as reporters, we had that thought too. We could report this right now that people are saying this, but then are we actually like sort of making the story true by spreading it? Because ultimately, Silicon Valley Bank's books were okay, right? I mean, they had to raise money, but they were solvent after, they did what they needed to do. So this didn't really need to happen. But I think once those whispers started on Thursday morning, it was like, it was a snowball effect and there was no stopping it. And I think Peter Thiel, obviously, I mean, a lot of people were upset with him for, saying this and then coming out publicly and saying it. But I don't think he, I think it would have happened anyway.
To jump onto something that Reed was saying, I have a friend who works at a fairly high-profile startup in Silicon Valley. She sits right next to the CEO, and she slacked me on Friday morning, and she's like, my CEO has been on calls with all of their VC and CEO friends all morning, and they're trying to figure out how to make payroll. Everybody is flipping out. And this speaks to the thing that I'm still wrapping my head around about this bank run is how much of it is based on word of mouth and watching what everybody else does. And, if they're doing it, I better do it. And, if this person says they're going to do it, well, I trust them. So now I'm off to pull my money as well. Because she's like, another one's pulling. And I just kept thinking, really, just based on a phone conversation with a friend who's nervous about SVP, you're pulling all of your money out?
Nobody wants to be the last one out.
Yeah, but that's what's happening is people are my friend said, and I was like, oh, wow, it's like middle school.
There's a good illustration. I think probably people have seen the run on the bank in the It's a Wonderful Life. But this is perhaps the best illustration from a much beloved American television show you may know as The Simpsons.
What do you mean the bank is out of money? Insolvent? You only have enough cash for the next 3 customers.
Now, I am going to get this show will be now taken down on YouTube, but I did that for you so that you would understand exactly how a run on the bank starts.
Yeah.
This is the thing too, that we live in a modern banking era. The FDIC exists. I'm somebody who will always bang the drum of Sheila Barr, who was the FDIC head during the 2007-2008 meltdown. Unheralded, I would say, person who helped the economy survive, and you can read her quoted saying very smart, sensible, and non-sensationalist things right now. And it was a run on the bank, but it's not the bank doesn't have the money scenario. And I do keep emphasizing that because it's the bank that has a shortfall,
right?
Likely.
A liquidity
we don't know how much.
problem.
It has a liquidity problem, and it may have a shortfall, but absorbed into a larger bank if it's, it's in the top 20, but there are much larger banks, and there's banks who would love to get all this VC people as their account holders.
Let's continue the chronology. So Thursday, there's a run on the bank. And I mean, this happened very, very quickly. I mean, I started seeing this. And if you were on Twitter, which really seems to be the place to watch this bank burn, you saw it happen in real time. By Friday, the Federal Deposit Insurance Corporation had taken over the bank. It was already, it was almost immediately taken over by the federal government.
I will tell you, there's an amazing photo that came out of that. There was a picture of one of the branches of SVB, and it showed a piece of plywood covering a window. And I thought, did someone break the window? I'm like, no, that's where the ATM is. The FDIC came, they pulled the ATM section out of it, and they put up a piece of plywood on Friday morning.
Wow. That's how quickly they move. I also saw a picture, I think it was fraudulent, of an SVB bank branch turned into a Spirit Halloween store. But I don't think I don't think that was real. Okay, I'm just saying. I'll check on it. But yeah, no. But that's good. That's what's supposed to happen, right?
Right.
The concern at this point, and what I've been reading all weekend, is wait till Monday morning. Now, Janet Yellen, the Secretary of the Treasury, was on the news shows this morning, kind of saying nothing. She said, if you're $250,000, you'll be insured. The rest of you will be made whole, but it's going to take a little bit longer, blah, blah, blah. I saw lots of calls on Twitter from people saying, somebody should buy this bank. So, Reed, explain now what happens next and what's going to happen Monday morning that we should worry about.
Yeah, I mean, what happens next with SVB is kind of surprisingly up in the air, because I think, there's a feeling that the Fed should come in, or the FDIC should come in, and basically the government should guarantee everybody's deposits.
A 2008 Lehman Brothers style bailout. Too big to fail. Right. We're just going to make everybody whole. That is not on the table, as far as I could tell.
I think it is. I think it is on the table. I think it's actually, if you think about it, a fairly sensible option, because, like we said earlier, they actually had the funds. I mean, the money's there. It just needs to be distributed. And now there's going to be this delay. And that's really the problem. Well, there's two problems. One is the delay, which then could sort of force startups out of business because they don't have enough money to make payroll. They'll probably be okay for the next 2 weeks. And then after that, it's up in the air. The other problem is just the trust, right? Like, do people trust the banking system? First Republic Bank was a competitor. They were trying to get a bunch of that Silicon Valley business as well. And on Friday afternoon, people started saying, wait a minute, should I take my money out of First Republic? And because the U.S. banking system is so antiquated, they weren't able to do that Friday afternoon because the wires shut down all weekend. Right. And so people have been, people I've talked to, entrepreneurs, venture capitalists, are texting each other, going on group chats and talking about, what are you going to do Monday? And I think the conclusion is, we should take our money out of First Republic now Monday. And so there's this feeling that, something has to happen. So the government has to step in and do something drastic just to restore faith in the banking industry. And I think it makes a lot of sense to just guarantee all deposits in this case, because what that would do is it would, people would feel better about the banking system. Hey, somebody's got our back here. But also the government's going to get that money back because the assets are there. So it's kind of like a short-term bridge loan, if you will, that could sort of stop a massive financial disaster. But I think there's a political problem, which is hey, you're bailing out these rich VC types, right?
Silicon Valley elites will be the phrase that gets used. Coastal elites, techie elites. It will be.
But it really isn't. It's not, or it's not just. Etsy set out an email to Etsy sellers saying there's going to be a delay in processing your payments because our cash, or at least some of it, was in Silicon Valley Bank.
Well, what's the name of the payroll service that uses Silicon Valley Bank? There was a really good piece in New York Magazine this weekend. And the reason I remember part of the piece, there's just been a tsunami of information. I remember the piece because it's a healthcare services provider in Florida that can't make payroll now because the payroll company they use is with, Silicon Valley.
Oh, that's interesting. So it's not that the healthcare provider's money was in SVB, but we do this too. We use a payroll provider and we transfer money into their account, and then they cut checks for the employees. The money was in SVB, and now they can't cut checks to the employees.
Yeah, the payroll service can't fulfill its obligations.
It was rippling.
Yeah, it's a ripple effect.
Yeah, no, it's called rippling. Yeah. That's the name of it. It's rippling and it's a ripple effect.
We use rippling as well. Yeah,
these are like home healthcare workers these are home healthcare workers in Florida who will have nothing to do with tech elites, or they're not venture capitalists. These are people who are busy taking care of your grandma for $14 an hour and are not getting paid for it.
This is Parker Conrad's tweet. We, Rippling, discovered yesterday that SVB had an unexpected solvency challenges. Just now we learned that the FDIC had stepped in and effectively shut down SVB. This is from Friday. Rippling has historically relied on SVB for payment rails for our payroll and other products. Now, he says, in light of yesterday's news, we immediately accelerated a planned switch to JP Morgan Chase. That's what a lot of people are doing. In fact, you had on Semaphore a good graph of percentage of deposits at select banks that exceed the insurance cap. Only Bank of New York was higher with 98%, SVB 97%, but JP Morgan's 68%, much more like a traditional bank. Citigroup's 85%. So people are looking for a safe harbor. It doesn't mean they're going to be able to get their money out of SVB, but even
it takes a while to open up an account, right? I mean, that was another problem people I talked to were having on, Thursday, Friday. It was like they're trying to transfer the money out and they don't have another account for their business.
Right.
So they were saying, well, should I just transfer my company's money into my personal bank account?
No.
An iffy situation. So I think and again, it goes back to like the antiquated U.S. banking system. It just takes a while to open up an account. They have all these know your customer rules. So, I mean, JP Morgan was definitely taking a lot of inflow on, Thursday and Friday, but it takes time.
There's antiquated, but there's also, that's the know your customer thing, as you mentioned. That's intentional. There are reasons to put a curb on it to prevent fraud and illegitimate criminal use. So that attempt for the regulators to prevent that is also putting a curb on this when there's a legitimate reason, and there wasn't time to put in some kind of override as well. But this isn't. I'm sorry, Cleo, you're still doing the chronology, but this isn't FTX. Again, it's not a. It's not an entry on a ledger that says $8 billion. Oops, where did it go?
There's another issue here with JP Morgan, by the way, that came up. So JP Morgan didn't used to lend to startups like First Republic and also Silicon Valley Bank do. They got into this business, I think, a few years ago and have been really trying to compete with Silicon Valley Bank. They've been trying to take a lot of people from SVB went over to JP Morgan. So people were saying, well, why doesn't JP Morgan just buy Silicon Valley Bank and then just end this whole problem? But there are rules about what percentage of total deposits in the country you can have. And all the big banks like JP Morgan are like right up against that 10% threshold. So they would have had to get special dispensation to be able to buy Silicon Valley Bank. And that's another question I have. It's like, why didn't that happen immediately? Like, why didn't people come in from the Fed and say, look, don't worry about that rule. We'll figure it out later. Because I'm sure JP Morgan would have loved to have just taken over that business.
There was so much misinformation and ill-informed opinions flowing all over Twitter. And we're going to try really hard today to, and it's good we have this panel. We're going to try really hard to give you actual facts and as little speculation as possible. And then there are people like Jason Calacanis, who I did try to get on the show today, who tweet all in caps yesterday. On Monday, I should just imagine me shouting, 100,000 Americans will be lined up at their regional bank demanding their money. Most will not get it. This is like Bart Simpson standing in line saying, this went from Silicon Valley insiders on Thursday to the middle class on Saturday. Main Street finds out on Monday.
That's the kind of populism nonsense that is going to get people hurt, and it hurts the economy because it's not true. It's the American banking system is robust. It's well regulated. This is a failure of one bank to manage its risks. It didn't have a risk officer. I just found out the other day, didn't have a person in charge of risk management this last year. The person previously in that position left after selling stock, according to one report. So, I think in 2021. So this is not we're in a very different position. Like all of us who are old enough are having flashbacks, 2007, 2008, 2001, the 1990s. I was in college when Black Monday hit in the late 80s, right? We all have flashbacks to these previous things, but a lot of those involved no money. They involved bad debt, bad mortgages, bad decisions that piled on. This is a structural error where if SVB had handled this correctly last week or in the last year or even last week, or had privately worked with the FDIC, the regulators, another bank could have sold themselves and become a subsidiary inside another institution. There are many pathways in which this didn't have to happen. Because it did, I think you can lay that largely at the feet of the people running the institution.
Well, and there are those who want to also blame Congress, because in 2008, the Dodd-Frank Reform Act was passed, in 2010 in response to the 2008 crash. That was repealed in 2018. Is it the lack of regulation that allowed SVB to ignore this impending crisis?
I don't know. They didn't do anything that was that. I haven't analyzed.
If I'm them, I'm saying, well, we bought treasuries.
Bonds.
I think there was an article in the New York Times that said, that they supported the rollback of those regulations.
They did, yes.
I haven't read an analysis, to your earlier point, like on exactly like whether this could have still happened. My guess is that it could have, that it wasn't necessarily just purely because of a rollback of regulations. I think the other question is like, what made Silicon Valley Bank think that they could get away with just sort of saying, hey, everything is cool, we need more money, but don't worry, your money's safe, and not actually arrange a sale immediately before this all spun out of control? I wonder why they thought that was possible. I really
went wrong.
Legitimate question. I mean, it's not a rhetorical question. It'd be interesting to hear the thought process.
Reed, there's your Pulitzer. Just find out why.
Yeah.
Well, it seems like all of this is just human nature. Everything from the bad judgment calls that Reed has pointed out, to how people chose to react as customers, to how people are choosing to amplify specific positions on Twitter. And none of this has any bearing on the realities of where the money is and how long it will take to get to your money and whether or not it's still safe to have your money in there. It's all just people reacting in a really knee-jerk sort of way.
I mean, the main reason Janet Yellen was on the news shows this morning was to just say that. Yeah. It's fine. The banking system is solvent. There's no problem. But do you think come tomorrow morning that there will be people who will go to their banks and what are they going to do? Put their money in the mattresses?
Did we run out of toilet paper in 2020? Yes, there will be people going.
Yeah.
You are always going to have people who move from a place where if this is happening, I want to get mine before it's all gone.
The rational feeling here, okay, if you have under, 250K, you're going to be okay, but there might be a period of time, whether that's a couple of days or a week, where you don't have access to that cash, right? So I think the rational thing is like, okay, do I have enough cash to,
it's Jimmy Stewart said, how much do you need to get through the week?
Have you seen all those memes?
That's an individual, sort of calculus. If you're a business, there's a whole other interesting calculus. But
the FDIC could raise the limit too. They did this during, I believe, temporarily during the 2007-2008 crisis. They could come out and say, we're raising the insurance limit to $1 million, $2 million, $5 million temporarily. They could come out and say, we're going to insure we're going to make the Fed could say we're going to make all of this liquid temporarily by creating a temporary bad assets bank, and then we're going to sell the good assets to a company that's going to give us par 100 to 100 cent value. Like, there's all these very likely positive outcomes, and so if you have someone like Calacanis out there shaking a fist and saying we're all going to, it's hopefully those people are. It's not helpful because it's not realistic. And if there is a panic, then the feds have to regulate. They'll come in, they will actually shut down withdrawals. They will have to invoke a higher level of bank calming that is required for this situation than was probably even required in 2007 and 2000.
Yeah, so, Twitter was probably part of the problem, and now it's sort of becoming this toxic.
It's fuel on the fire.
Becoming this sort of toxic.
Accelerant.
Don't bail out the VCs, and it's like totally just cutting off your nose to spite.
The only people who lose money are investors in SVB.
Yeah.
Equity stakeholders in SVB. Right. They may lose money. They probably will lose money, right?
They'll probably lose. Yeah. So the taxpayers may have. I mean, the TARP program in 2007 to, I think, wound down to 2011 or 12 or something, it was profitable. The American taxpayers got a return on that outlay. There are disputes about whether it was actually necessary, the way it was structured, et cetera. It was not a net loss to the American taxpayer. So depositors will probably be made whole. Taxpayers may be on the hook for nothing or will be made whole. Shareholders, the people who people like to complain about, the people who are invested in the market, the people who are taking speculative risk by owning assets and not doing enough research or whatever, they're the ones who will take it on the chin, and that's probably the way it should be.
That's how it works. I mean, that's why it's called speculative. Right. If it were a guaranteed thing, you wouldn't have to buy T-bills.
Yeah. So I think people that this is like this sort of like anti-billionaire sort of sentiment.
Yeah.
And I think there's like there are two issues, right? It's like one is there's income inequality is a big problem in this country. It's destabilizing. We need, you might think we need, universal health care. We need, backstops to help people out. But like that's sort of a different issue from there's this emergency right now, and if we don't solve this problem, there's going to be a huge, a huge disaster, right? And I think people have a hard time separating those two things. Is what's going on.
I think the challenge is you have to take a look at the SVB and say, okay, how much of this emergency is just a self-inflicted wound and they're just going to have to limp around because they stubbed their toe, and how much of this emergency is they've stubbed their toe and they're now careening around the room knocking into other people. Stub your toe, that's fine, just don't take out anybody else on your way down.
So on Friday, the FDIC, the California Department of Financial Protection closed the bank, invited the FDIC in as receiver. The FDIC has now renamed it. On Monday morning, a new bank will open. It'll be called some sort of
Santa Clara
Deposit Insurance National Bank of Santa Clara.
Very exciting.
They're saying checks written on SVP accounts will continue to clear. They're not going to stop that. Insured depositors, the FDIC said, will have access to their deposits no later than Monday morning. At that time, the branch offices will open. In fact, the FDIC offered big bonuses to employees to stay at work, not to leave. Yeah. We'll give you a 50% raise or double OT but you are going to lose your job in 45 days. So they're going to, I don't know what's going to happen. That may not even be true if a bank buys them and keeps the branches open. So it's unclear.
There's a piece of news out today. You may all have seen this, but it was that it may have been from the morning shows, but the Washington Post has a story describing the process, and it says bids were expected by with the
11
deadline at 2 p.m.
Right?
today. 11 a.m. Pacific, 2 p.m. Eastern from banks interested, and then that's when we know whether something more extreme will have to happen. If Goldman Sachs or J.P. Morgan or somebody else comes along and says we're willing to, there's going to be a Dutch bid or something, a reverse Dutch bidding, where you go to the highest bidder, the one who gets closest to $1 will win. And then I don't know the mechanics of it. I mean, this is where, Reed, I will agree with you on antiquated banking process. What happens? I
have to say, though, it may be antiquated, but I'm impressed at how kind of efficiently and effectively this happened. I mean, we have some experience with this going back to the Great Depression, and so we do have a system that seems to work. So the auction is over now. They haven't yet announced. So according to the Post, Congress is weighing the preferred solution would be a bank comes and buys them.
Yeah, absolutely.
But Congress is weighing protecting all deposits if the plan to sell fails, according to the Washington Post.
I just think one of the possibilities would be out there, but I just wonder, structurally, you've got account, my account number 53 at SVB, what happens, JP Morgan bought all the assets, let's say, so do you suddenly have a JP Morgan account? Do they reopen the old accounts? I wonder, is it a minutes, days, or 4 weeks before?
And there's also concern. I mean, this
billions kick out.
This is the 17th or 18th largest bank in the country. There's also some good, reasonable concern that it concentrates the banking system, and you don't.
Yeah.
You don't want to do that. You don't want to make a big bank like JP Morgan even bigger.
Because what happens when the next largest bank is the one that has the panic in the bank run?
In that event, so 250,000, you're covered. Don't worry, that's fine. That's done. More than that, a provision of federal banking law, according to the Post, may give the FDIC the authority to protect uninsured deposits as well, if failing to do so would cause a systemic risk to the financial system. In that event, uninsured deposits could be backstopped by an insurance fund, which is existing. It's currently paid into regularly by U.S. banks, but 2/3 of the Fed's Board of Governors and the FDIC board have to approve that, along with Janet Yellen. So I think there is a fairly orderly process. And I think really the most important message, and this is Yellen's message on Face the Nation, is we got it. It's under control. Mm-hmm. Don't run to your bank on Monday and take your money out. That would be silly. And if you're an SVP depositor, hang on. We got you. Even if if the money you have exceeds the insured amount, you're going to be okay. It just may take a little bit longer. Is that accurate to say all of that? Reed, is that roughly the...
Yeah, it is. I think that to stop this, though, to stop people from going and taking their money out on Monday, there's going to have to be something that's more concrete. I mean, I was on a group chat today where, they got a message, somebody got a message from First Republic Bank saying, don't worry, we've got enough money in our accounts, everything's fine. And they screenshotted it and said, oh my God, they're screwed. And
No.
I mean, there's this like inverse effect, right?
Yeah.
Of like as soon as a bank or whoever it is just says, don't worry, everything's fine, like it makes people nervous. And the whole system just relies on the fact that people aren't nervous, that they trust the system. So I think it needs to be something more like, here's exactly what we're going to do. We're going to guarantee all the deposits or whatever it is. And that's what's going to make people feel better, I think.
Yeah.
I'll tell you the secret is have all your money in mortgages and debt. If you, like me, if you don't have cash in the bank,
You can't
you're
lose
totally
anything.
protected.
Can't lose it.
And they'll
Right.
be sure to
Yeah,
make
it's
sure those
fantastic.
mortgages continue.
Yeah, I've got
Without-
listen,
without
I feel very lucky right now.
Let's not get into the real estate talk. I have all my money in real estate, so it's even more scary, I think.
This is not, I mean, I'm close to retirement, so I have all of my retirement funds in a single institution. It's not a bank. It's it's Fidelity. I presume I'm okay, but I don't know.
But it's an investment. Yeah,
It's an
there's a
investment,
different-
right? It's not
different
like
set of rules
they
that cover,
actually have to be
non-cash
holding the stock certificates,
Yeah,
right?
yeah.
They can't
Yeah.
just lend that to Glenn Fleischman and hope everything works out okay, right? Okay, good.
Oops, all, no, they're going to say, oops, all Bitcoin is what they'll tell you. Virus.
We went big on NFTs.
We did.
I hope that's okay.
We did at one point. There was an advertiser came to us and said, "Hey, yeah, we will now let people buy Bitcoin in their retirement funds. Can you do those ads?" And I said,
Oh, my God.
"No,
Thank you.
I don't think I want to
Thank
do that to
you.
our fine audience. I try not to recommend things like that." Washington Post again talked to a professor at the University of Chicago's Booth School of Business, Neil Kashap. He says this is not a systemic event. This is a mid-sized bank that was badly managed. It may be a little messy, but that's different than if you have somebody at the core of the financial system stop making payments to somebody else at the core of the system, and then the core implodes. This is not a systemic event. We're going to be okay. So that's the message, right?
Yeah.
Did you
Don't
say
listen
his
to
name was-
Jason Calacanis. It's going to be fine.
I'd be super
Except-
curious with his tweets. There's a lot of quote tweets, and are the quote tweets amplifying and buying in, or are they like, this is monkey shines?
Do you think people are, well, I think for Jason it's entertainment, right? But there are probably people, hedge funds, you talk about that, read in your article at Semaphore, that want to capitalize on this, that hope to make a little money. The hedge funds are offering, what is it? You said 60 cents on the dollar.
It's not an act of charity, man. What are they
But
doing?
I will say, nobody's taking that deal, right? I mean, they were coming in and trying to get 60 cents. That would be a great deal for them, right?
Because
I
they
mean,
know
'cause
they'll get the money ultimately, right? That should be the information you need. They wouldn't be offering money if they didn't think they were going to get their money in the end.
Yeah, it's going to, I mean, I think people are thinking like the worst case, 90 cents, 95. I mean, look, I could be wrong. Everyone could be wrong. I mean, I have no idea, but that's what everybody thinks. But,
Well, the good news is we don't record this show, so you could say anything you want. No one will ever hold you accountable.
There's no record.
There's no record whatsoever. This just goes
I
into
remember
bits.
what was going on before this show. You were looking up every episode. AI
Oh,
models
yeah,
on-
I did.
on every
I
old
forgot
episode.
about
I just
that.
want to point it out that you quoted a guy from the Washington Post who sounded like his name was Neil Kashap. I know that wasn't his name, but I did think it was ironic that it sounded that
Mr.
similar.
Cash App said he wants to he should be in business, right?
Mr. Cash Dollar.
$42 billion in withdrawals in Thursday. $42 billion, which led it on Thursday alone with a negative balance of nearly $1 billion.
But they had 41 billion on hand, which
But
is
they had
pretty
42.
amazing
Yeah.
when you think about it.
What is there is a, I mean, maybe this is old fashioned, but there's a reserve amount that they have to keep in
Yeah.
the vaults,
So
right?
it is.
Seems
Yeah,
like
well, that
$1
was
billion.
what forced them to have to do the raise and all that, right?
Right.
I mean, they had to,
Right.
you know,
They needed the
and
reserves.
sell
I
illiquid
see.
assets, right? And-
And that's what triggered this, was keeping those reserves.
This is still what's weird about the modern economy too. Is whenever you talk about cryptocurrency, you know, it's all exists electronically. It's only like $2 trillion of cash in actual physical form that circulates, and I think it's 20 trillion that is in only as electronic records. So there is a kind of I mean, it's real. It's real in the sense that
But
we
it's bits.
all believe in it. We
Yeah.
all trust it, but it's backed by the full faith and credit of the U.S. government, but it is a bunch of electronic records. So when they had 41 billion in withdrawals, I'm guessing 40.559 thousand of that, or million of that, was probably in
Yeah, you
in
don't have
digits.
some kid in Allbirds running over to the bank with a wheelbarrow. I need the startup funds.
And the other
need
thing
the
to look at
billion-dollar
when you're
bill.
watching Twitter is maybe is to look at the angle somebody's working. For instance, if you had $1.5 billion in the bank and thought, oh God, what are we going to do? It would be in your interest to create a run on other banks so that the FDIC would step in and bank and cover your $1.5 billion, because they're not otherwise. So there may be also some incentive for people who are deeply involved in SVB to get other banks to suffer so the FDIC steps in. Things like that. You got to keep in mind.
So instead of it being a mid-sized bank that...
Yeah, let's make it a big failure so that I can get my ass covered.
Yeah.
But believe me, people
There's been a
think
lot
like
of that on Twitter. There's been a lot of people sort of talking about First Republic now and saying, it's like doom's.
So consider the source.
This feels a
and
little
what
bit
they
like
get
the
out of that.
GameStop stock thing, where you just had a group of people who were like, wouldn't it be fun to juke a bunch of stocks? Let's create buzz and let's create a crowd action, and then let's see what happens.
But never underestimate how poorly people will behave if there's money at stake. They really will act badly in their own interest, even if it means a million other people suffer. So just when you're reading Twitter, best thing would be not to read Twitter ever again.
I was going to say, I missed all this. I'm not on Twitter.
By the
so
way,
I get to
Mastodon,
avoid
did
it.
you see a whole bunch of stuff in Mastodon about this? A little bit. Wasn't a lot of freakouts.
I think on that point about just sort of acting in your own interest, it was interesting to talk to venture capitalists. I mean, a lot of them felt the thing to remember about Silicon Valley Bank is like it was a community institution in the Bay Area, right? For the tech industry. They had all these events, they had box seats at the game, they had cabins up in the mountains. They were really like, they built these close relationships, right? And I remember talking with a VC or texting with a VC on Thursday morning, and I said, what's going on with SVB? And he's like, what do you it's fine. I was there. I was just with people at SVB. They told me everything is fine. It's like, it's not a big deal. And then it's like, a couple of hours later, the same VC is like, we're having emergency meetings. Like, I think we need to like take the money out, but felt like bad about it, but I think there was this cognitive dissonance in the Valley where I think like these VCs who, had the Silicon Valley Bank had helped them. Like a lot of them had personal mortgages there at like very low
Or they
interest
got their
rate.
first credit card there, or their first.
Malik mentions that they were the only bank willing to take a flyer on him when nobody else would.
Yeah.
I mean, he talks about that.
Oh, yeah.
There's a lot of people.
So
that
they have relationships, which is why, by the way, another bank might want to come along and reopen under the SVB brand.
You can't buy those kind of relationships. Those are just built up over time and overseeing how they benefit other people. It's positive reputation.
But even the CEO of SVB was like asking people. He's like, "Look, we were there for you. Like, be there for us." And it turns out like that's just not how it works.
No,
like,
it
people,
isn't.
If they feel threatened, they're gonna take their money out. And it was kind of sad actually to talk to people. I talked to one entrepreneur who told me that he had a story about 9/11. Like he had a term sheet that went away with the World Trade Center basically, and like SVB was there with a loan to like help him get through it. People just had this emotional connection to it, and I mean, it's a little. I mean, maybe I'm getting a little sappy, but and it's all just business. But it was. I think there was an element to it that wasn't really like a normal bank, and I think that also played into maybe this feeling that they could get through this. They could get through their tough times because they had built up all this goodwill, and it turns out no.
So
But
it's
Reed,
like the
nobody's
opposite of that scene in It's a Wonderful Life, where instead of it being like your money's in this payroll service and it's here and it's here, it's like, I don't care. I want my
give me
money.
my money. Give me
I
my
think it's okay to be
show me the
it's
money.
okay to be sappy and human about this, though, because there's no allegations of fraud. Whatever happened, if people made mistakes, which it seems like mistakes were made, but they were not totally unreasonable failures, people covering things up. Maybe we'll find out later there's more to that story, but it just seems like there was that interview with the CEO last Tuesday where he's like, oh, I love to go biking. It's really relaxed. I mean, you're just like, the guy had no idea this was coming. There was this was a storm that hit them. Maybe they summoned that storm, but they didn't do something wrong. Like, these aren't malefactors who there's going to be a 5-part Netflix documentary about.
Right.
It's going to be more like a very technical story. I can imagine it's one of those pieces that like Barron's runs. It's 10,000 words explaining every little, financial thing, but it won't be a Theranos or something. Doesn't seem like
but
at
I think
all.
that there will be. I mean, I agree with you, but I think people will go back and they will write stories about, this bank taking risks and, making loans to risky startups and all this stuff. And I think there is an element where that the bank did sort of take on this kind of like acceptance of risk that their clients had, right? Because that's the culture of Silicon Valley is, you take these risks. And a lot of times these loans, they were sort of almost backstopped by just this faith that, hey, we know the VC firm behind this company, we know those people, and not so much, I mean, because how could it be the fundamentals of the company, right? These companies have no revenue, so most of them. So I think, of course, like a lot of the founders who took out loans were doing so that they could hold on to their equity, right? Not so much because they needed the money, when they could have gone out and raised more capital and given away shares. But they wanted to become more wealthy. So I think you could go back and you could spin that story in a way, and I'm sure people will. But I do think that's a spin, like that's a take on it. I think it's kind of a cynical take personally. But
I got to tell you, Financial Times had an article on February 22nd, almost a month ago. Silicon Valley Bank profit squeeze and tech downturn attracts short sellers. California institution that serves startups seen under scrutiny over investments that have left it with an unrealized $15 billion loss. I mean, this shouldn't have been a surprise, right? But it's not malfeasance. They invested in long-term federal
T-bills,
bonds, right?
Yeah,
not exactly
right.
prime mortgage.
Right.
Matt Levine at Bloomberg has this, he has that great newsletter, and he's
Love
been
Matt's
banging this drum
take. He's the first guy I read on this, by the way, immediately.
He's been banging the drum for a long time, which I think is generally agreed by very sensible people, is that when you're at a time of 0% interest, you invest in weird stuff because you need to get a return, and money's free to get. So all the money that flowed into crypto and all the money that flowed into VC was because you needed something more constructive to do with your money. The minute interest rates go up, everybody who's locked into anything long-term at low interest rates where they can't get it out, where it's illiquid, they're stuck like SVB. And anybody who wants to take their money and put it into something safer but now high interest takes their money out of things that are structured in a worse way. And so crypto imploded, SVP imploded. Levine would argue this is just a natural consequence of higher interest rates.
Let's take a little break. And so I think we've covered this sufficiently. Jason Calacanis is listening and wants to rebut, but I know you guys would prefer not to do it while you're on the air. Maybe after the show is over, I'll give Jason 10 minutes and he can. Is that okay with you?
I won't be here.
That's fine.
I need to plug in. I realize I need to plug in my laptop.
Go plug in your laptop, Reed. I'm going to talk about ZipRecruiter, and we'll be back with other subjects because I know, a lot of our audience says, "So what?" Right? So what? I think we tried to explain that this will impact normal people, like your payroll might not be working, but ultimately this should be, and I hope it will be, a so what. Everything goes on. There's no run on the bank at 9 o'clock tomorrow morning, and everybody goes back to life as usual. But it was a big story. Let me tell you, it was a big story in Silicon Valley. Our show today brought to you by ZipRecruiter. If you're hiring for your team, thank you, first of all. Despite current headlines, several industries, healthcare, hospitality, cybersecurity, they're all heading for a hiring boom. So no matter what industry you're in, if you need to hire, there's one place to go. It's where we go. The minute we've got an opening, we go to ZipRecruiter.com/twit. And here's the good news. You can try it right now for free. If you're down a person, it's a tough thing. When our continuity person got a different job, she didn't want the commute. She left. She gave us 2 weeks notice, but we're thinking in 2 weeks, everybody's got to work harder because we've all got to cover a job. Lisa's freaking out. That morning, I'm sitting with her at breakfast. She says, I got to post this right now. I mean, she literally just got the email. She goes on ZipRecruiter. Before lunch, really within the first hour, she starts going, oh, hey, we got a good one. Oh, this one's great. This one's wonderful. We got a bunch of great applicants. And in fact, we hired our wonderful Viva thanks to ZipRecruiter. That's what's so awesome. I could tell you all the great things about the ZipRecruiter interface. You don't get emails. You don't get phone calls. It all goes into the ZipRecruiter interface. It makes it easy to screen people, rate them, hire the right one fast. But I got to tell you, the best thing about ZipRecruiter, it uses its powerful matching technology. When you post that job, instantly they go out and look at current resumes they have on file to find qualified candidates, people who meet your needs, and then they give you the names and say, if you'd like to invite them, these 5 people really would be perfect. You send out the invite, which makes a big difference, by the way. When a company, you're applying for work and a company comes to you and says, hey, we'd like you to apply for this job, you're gonna go to the interview, you're going to show up, you're going to be wearing bells, right? So we get great people that way. I just think ZipRecruiter is the easiest, fastest, bestest way to hire. That's what we use. 4 out of 5 employers who post on ZipRecruiter get a quality candidate in the first day. We usually get it in the first hour or two. It's amazing. Find quality candidates fast. Let ZipRecruiter keep your team growing strong. Can't have Viva, though. We love Viva. We're not giving her up. ZipRecruiter.com/twit. You could try it for free right now. ZipRecruiter.com/TWIT. We thank ZipRecruiter for supporting the show. And we thank you for supporting it back by going to that address so they know you saw it here, right? ZipRecruiter.com/twit. Reed, you get plugged in?
Yes.
You have
Looks like I
power?
have power.
Have
I
power.
didn't realize. I thought these new Macs were supposed to have like a battery that lasts forever. It's like I had 100% battery.
Wow.
when I signed
Zoom
up.
must suck it down.
Really?
Yeah.
What?
Well,
it's down to
also our
5%.
shows are longer than they feel. Or something. I don't know. It's actually been
Been like-
5 hours, didn't you know?
Yeah, I was going to say,
Yeah.
it's already...
Supposed to keep
because
all
you're
day
over
battery.
now.
There's a lot of
Tomorrow.
listeners saying, Leo, this show is never longer than it feels.
already tomorrow.
Oops. Yes, it's already Monday morning. Let's see what else is going on in the world. Meta, aka Facebook, has threatened Canada. Why I oughta. So there is a bill, C-18. We've been talking about it before. Michael Geist, who's a Canadian lawyer, talks a lot about C-18. It would make Google and Meta compensate news organizations when posts or links to their work appear on those sites. So if, Lisa, you're on Facebook and you say, oh, here's a great article about SVB, you post it there and Meta's got to pay Semaphore for that article. Meta doesn't like that too much. A spokesperson said the company is planning to remove Canadians' access to both written and broadcast news if Bill C-18 becomes law.
Whoa. So what they're doing, in other words, if you're a Canadian who uses Facebook and you wanted to
News.
You wanted to put a link to an article, you couldn't do that anymore.
Couldn't do that. Instagram too.
How are they going to enforce that? Are they going to use geo?
I think you could put a link in, but it wouldn't get
Well,
propagated.
no. Like, how are they going to know that it? So the question I have is, first off, is this law only for Canadian citizens? So if you travel from Yellowknife down to Miami, are you like, all right, now is the time for me to shine, and you have and you do all your links, or are
it
they?
would just be Canada.
Well, then this is the thing: is if you're a U.S. citizen, and
It's not going to affect you, Lisa.
well, no. I'm serious. It could though, because if you go to Vancouver and you're like,
Oh, no, you can't do it in Vancouver. Yeah.
well, but I'm a U.S. citizen, so why is Meta
Because you're in-
abrogating my rights as a U.S.
you're in
citizen?
Canada.
And
Blame Canada, baby.
and what are they going to do about VPNs? What is to stop somebody from using a VPN and saying, ha 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 ha, I'm not in Yellowknife anymore. I'm in Venice.
Elisa Laventure, a Meta spokesperson, said, if the Online News Act passes in its current form, we will end the availability of news content on Facebook and Instagram for people in Canada. a legislative framework that compels us to pay for links or content that we do not post and which are not the reason the vast majority of people use our platform. I'm getting all worked up. It's neither sustainable nor workable. That's a big threat. Remember, Google's done it, though. Didn't Google do it in
Australia?
France or Australia?
Yeah. Australia.
They threatened it in Australia. Did they actually
Yeah,
pull
it was a whole thing.
Yeah.
I think they worked out a negotiation.
Yeah, Murdoch
right?
backed down in Australia.
But I think it winds up, if you negotiate and you wind up agreeing on fees, then it means that the biggest players wind up working out their deal, I think, right?
Yeah.
Because they get
And the rest
they cut
of us
a
get
deal,
screwed.
the smaller players.
Yeah.
It's I understand why. I mean, yeah, I love that Facebook is threatening to do something they say doesn't matter much to its users. We're going to do this thing that doesn't matter much to our users. So there, and it's like, well, it doesn't matter much to users. Then why do you care?
Right.
Why would your users?
Well, they don't want
care?
to pay.
The news media,
Canadian
I think, arguably
Heritage
doesn't-
Minister, which is, by the way, a great title. I like that. Pablo Rodriguez said, Meta's decision to pull back from news is a threat, intended to persuade the government to make changes that would reduce the amounts the tech it's a negotiation ploy. It would reduce the amounts they'd be required to pay news organizations. Rodriguez says it's disappointing to see that Facebook has resorted to threats instead of working with the Canadian government in good faith. This tactic didn't work in Australia, and it won't work here. I have to say, I'm a little bit on, I hate to admit it, I'm a little bit on Facebook's side here. It makes no sense for well, okay, so how do you feel, Reed, if Facebook put your article from Semaphore, so Lisa loves your article, posts it in her Vancouver home, or her Yellowknife home, posts it on Facebook, do you think Semaphore should get paid? Because what you're going to get is a picture, a snippet, and then a link back to Semaphore, right?
Yes.
Semaphore is going to get the traffic ultimately.
I mean, I'm sort of with you on this. I mean, I think that I worked at the Information for 4 years, right? They're behind a paywall and they have no advertising, right? So if you click on that link on Facebook, you're going to hit their paywall. And, you know, that's what news organizations, if they want to have that business model, right, then they can have a paywall and it doesn't ultimately matter. But I think if you want to have the advertising business model, then you kind of want that traffic and you want to get that click through. The problem is, I think historically, like news organizations just became way too dependent on Facebook and on social media. And then it skews all the incentives, right? So I think the problem is more with I mean, I hate to say it, like more with the news business and people just, you know, sort of optimizing these businesses for clickbait. And we've seen the trouble that's gotten us into, right, over the last 5 to 10 years. So it's a problem, I guess, that goes beyond Facebook. And I don't think you can blame Facebook for the problem. But I mean, it does make sense to think about this and try to figure out, you know, how do we fix all these problems, right? So I don't know if they're going about it the right way, though.
It seems like the internet has been hard on Rupert Murdoch and other newspaper barons. And they blame the internet for the loss of revenue in classified ads, right? They blame the internet for the loss of revenue in display ads. So their attitude is, well, they need to give us money. Do you think it's different though for online sites like the Information or Semaphore? Or are there more
Semaphore? I mean, the Information and Semaphore are very different. I mean, the Information is just like, okay, we're gonna. I think the Information, I mean, it's the most pure.
I can't get to the Information, right, if I don't subscribe. I could see the link.
And so,
but you're probably not going to get a lot of share. Did you? I mean, I don't know. But
well, no, that's the problem, right?
Yeah.
I mean, that is the problem. Like, I worked for the Information. I loved it. But we'd have these big stories, and then people could sort of rip you off and not credit you because you are behind this paywall. And at the time when I started there, 2015, I mean, people thought paywalls were insane, and then it became all the rage. Now it's kind of like we're in this sort of weird sort of in between area right now, with newsletters and all that stuff. But the Semaphore's business model is kind of in between. It's not a clickbait social media business model. It's more of a newsletter premium advertising model. So we're sort of in between the Information and like whatever, some name any big online publication.
Right.
But back to like the advent of the internet and the classified ads. I mean, newspapers could have just said we're going to charge people for our news. For some reason, in the 90s and early 2000s, newspapers decided people are willing to pay. They pay us to deliver this thing to their doorstep every day. But now let's just offer it for free online, which is in hindsight kind of insane. And I mean, I think that was the original sin, really, as somebody who works in the business.
And I will say I pay $400 a year for the information, and it's well worth it for me. But I'm in the news business. I pay for Bloomberg too, which is hurts my heart, but I do because I need. That's part of my job. But also, I'm very reluctant to share links from any of those paywall services because I don't pay for Financial Times, and I just intentionally ignore everything they say because I can't get in there.
I think the idea of gift links, which has come up, I've seen them at both the New York Times and the Washington Post, where the idea is that you can gift a story as a subscriber. I think that's a great idea because, well, it's great in the sense that I read this cool thing. I want you to read it from a news. It's also really great from a data gathering perspective because if you think that someone on the back end is not tracking which articles get gifted most often, how many of those gifted articles lead to upsell or further engagement, like that's just a great data pool to act on. But I agree with Reeve that this points to bigger funding and profit model problems within journalism and within publications as a whole. And part of it is journalism is not considered a public utility or a civic utility. We don't live in a country where it has a lot of government funding. For example, Germany has publicly funded, government-funded journalism as part and parcel of their culture and the way they do things. We don't. And building traffic sometimes is the only way people, and also I'm sure we all know people who the only way they consume news is if someone else spoon feeds it to them. Hey, did you see this? Hey, did you know about this? Like your mom used to send you clippings. Now your mom puts them on Facebook. And it's foolish not to try to build that audience, but I question why you would need to monetize it when there are probably other ways that are more reliable to make money than shaking down either Facebook as a distribution model or shaking down publications, which would absolutely take small or scantily funded publications out of the running and cause us to lose those contributions.
I do. I mean, I worry about Semaphore because I really like Semaphore, and I'm sure the Smiths know what they're doing. But I remember what was now I've already forgotten the name of it. The Politico had a similar news operation, Protocol, right? Yeah. Which has folded. And I do worry that if you don't have a paywall and you don't have a robust advertising business, I'm not sure how you succeed. I guess the Smiths know what they're doing.
Protocol, if you remember, laid off, I think, like most of their employees after the first couple of weeks. So we're doing better than that. At least.
Good. Congratulations.
I think they also didn't have, they didn't have the, this is just from talking to people, friends who worked there, but they didn't build up the business model, side of the operation from the beginning. And I think Semaphore, it's really well thought out, and there's great people.
Ben and Justin have a lot of experience in this area, and they know what they're doing, I think. And you
totally. I think it's very different.
Team and yeah.
I mean, obviously, I'm talking my book, as they say. But I think there's an interesting technology question in journalism, which is like, how do you rebuild what we've sort of missed now, which is like these institutions, especially in smaller towns where, like not the big cities that have the San Francisco Chronicle and those kinds of papers, but like, how do you rebuild those community hubs of great journalism that didn't just cover City Hall and do investigative pieces on corruption and stuff like that, but they covered the high school sports and the local businesses and all that. I mean, I know that's not a technology question per se, but, in a way it is, because, it's not easy enough for local journalists who maybe are older, don't have the technological know-how to start their own subscription services. It's not very easy for them to do. And that's kind of what I'd like to see from the tech industry, is like more thought about that. I mean, it's not going to be
You don't think Substack and
$20
Medium and places like that are sufficient? There needs to be.
So I think one of the
that's how Substack started. Sorry.
No, go ahead.
sorry.
Finish, Reed, and then
Yeah.
Lisa.
No, I think that was the dream of Substack, and it's kind of gone in this different direction. That's all I was going to say. I didn't mean to interrupt.
They've gone for the big
I jumped
high
in.
dollar bylines, obviously.
Yeah. I mean, we love it. We love Substack, right? It's just not. It's not exactly
It's not going to
that,
help.
right?
It's not going to help the journalist on the street, the guy and gal covering the city council meetings.
Well, wasn't that the dream
I'll be
of
frank-
Patch for a while?
Patch.
Yeah.
I still
yeah.
read Patch. Patch exists, doesn't it?
I still think
I don't know
one
if
of the
you'd get any
biggest
money out
missed
of them, but-
one of the biggest missed opportunities of the Audis was the Gothamist empire, because you had Gothamist and LAist and Seattleist and
Right.
SFist and Austinist and DCist and Chicagoist.
Why
and
did that fail?
Well, what I think should have happened, again, missed opportunity, is they really should have just spun off and sold the different city verticals to different newspapers. And
Yeah, but the newspapers are history.
or they could have sold them to. It's been interesting. LAist is now with KCRW, I think, a local,
Oh.
and I know that Chicagoist was recently revived, but it was from the news. From what I'm saying is, from the newspaper perspective, they really should have jumped on the IST blogs and the Audis, because you had in those blogs, and full disclosure, I wrote for LAist and for SFist. You had really smart, engaged staffs that were hyper local and building out a phenomenal amount of coverage. And it would have been great for the San Francisco Chronicle or the LA Times to be like, okay, we're just going to lift you and shift you. You're not going to threaten newsroom operations. You'll still have your Metro reporters, but we want you to keep working on that community building and that local feel where you are talking about nonprofits that are doing dog adoption drives every Friday, or you are talking about the taqueria that just launched, or think, because that's another part of
We
local
have a
news
really
too.
nice local paper, but
Yeah.
we're lucky in Petaluma. Hey, Reed, is your beeper going off?
Yeah.
Is Liz trying to get a hold of you on Slack? Because
There's news.
There's news.
Oh no, what's going on? Sorry.
Joint statement by the
Probably.
Department of Treasury, Federal Reserve, and the FDIC embargo just lifted a few minutes ago. They are going to back all depositors. They're going to
See,
back
we were-
all
There,
depositors.
that's what I said earlier. I thought
Yeah.
You
There we
said that
go.
wasn't on the table, and
I was
There you have it.
wrong.
Closed
Depositors.
another bank, though.
This is from the press release. After receiving a recommendation from the boards of the FDIC and the Federal Reserve and consulting with the president, Secretary Yellen approved actions enabling the FDIC to complete its resolution of Silicon Valley Bank in a manner that fully protects all depositors. I presume this means beyond the ones with the FDIC insurance, beyond the $250,000.
Right.
Depositors will have access to all of their money starting Monday, March 13th.
There you go.
That's tomorrow. No losses associated with the resolution of Silicon Valley Bank will be borne by the taxpayer. So
Yeah,
this is
this is all-
very good
That was
news. That stops it cold, right? No running the
that was
bank.
They've
that was
closed
the
another.
that was the common sense thing they needed to do,
Yeah.
and they needed to do it now before the markets open in Japan and in Asia. So
They just closed Signature Bank also, which sounds like it was in a similar place, so it'll get folded into this. It had quite a lot of money. So at the end of 2021, it had $118 billion of assets.
It was
I don't know what
closed
they are currently.
today by its
Just
state
today.
chartering authority.
Yeah, so significant. So in the top, I don't know whether that is 50 or 40 or something like that. If Silicon Valley Bank was
So a
number
second
16
bank,
or 18.
a second bank going
Yeah,
down.
but similar. Sounds like similar thing. They put their money in the wrong kind of paper, but didn't blow it all at the track.
The Fed also announced it will make available additional funding to eligible depository institutions to help assure banks have the
Right.
ability to meet the needs of all their depositors. So
Easy.
this is very strong action to really prevent any further aftershocks.
Yeah.
from
Well,
this.
they've analyzed the assets now too, so they know when they say no taxpayer money will be put at risk, it means they know what's in there and they can wind it down on their own schedule, or they can exchange it for other kinds of debt or what have you. So it's all going to be,
It's-
as we said at the outset, it's all rational minds have prevailed.
Yay.
now, imagine if somebody actually sold their deposits for 60 cents on the dollar to some hedge fund.
I hope
The hedge
nobody
funds
did that.
are happy now. That's a good point, because that hedge fund's going to be 100% whole tomorrow.
Hey, I wanted to circle back to the newspaper question, if you don't mind.
Yeah.
Sure.
The local newspaper. Well, so I mean, whenever you look at the newspaper market today, you have to look back at 100 years of newspaper ownership, largely controlled by families. That dramatically shifted because of a combination of inheritance tax, bad planning, other factors during this transition to internet-based advertising, with all these families taking 20 to 30% margin, expecting it as their due, not going with the times, and then being sucked, then letting corporations buy them out. And so the families, like the one that owned the Wall Street Journal, the ones that owned the LA Times, all these other papers, the Seattle Times being one of the rare exceptions with still 51% family ownership, there wasn't a constant reinvestment. They sometimes had big newsrooms, but the families and the companies that owned these newspapers for decade after decade just had a monopoly on kind of advertising. They expected 20, 30% margins every year. They spent the money. They did not reinvest it in a way to build a lasting journalism opportunity for the future when things started to look like they were going to go down. So when things got bad, even when the margins were still relatively high, they took the money, they sold it out, they saddled themselves with debt because of the buyout provisions, and that all got sucked away into the ether, and all of those, thousands, tens of thousands of jobs lost. And that was a particular blip in the history of news. Is that going to be the long-term thing? No, but there's a rebuilding period. You can't go from the hundreds of billions of dollars that newspapers were valued at during their heyday in current dollars, and then say after this whole transition, newsroom staffs demolished, real estate sold off, the vestiges of papers existing, you can't rebuild from that foundation because the money isn't there from advertising. You have to find advertising in different ways, and Facebook and Twitter and other networks took the lion's share of that. So at some point, Facebook has lost its kind of hegemony. Things are changing rapidly. There could be new institutions that rise, like Semaphore, that figure out models that will succeed, that aren't physical media based, and that can tap some of these billions and billions of dollars being spent for advertising that newspapers will never probably get back.
Yeah, I think if you're looking at models, and coming as I do from B2B journalism at this point, we used to have what's called qualified circulation, meaning that before people could get our print publication, back in the days we had a print publication.
Like eWeek and MacWeek and all
You
of those
used to have to qualify for it by listing what is your job title, how big is your company, and then you could aggregate that data and you'd sell it to people, and they could then target your reader audience with.
That seemed like a lucrative business.
Well,
what happened?
It's actually still going, and it's changed because what you can do now is you can build out custom webinars, or you can even host events, or you can have sponsored newsletters.
Was there less interest in the paper magazine? Is that
Yes.
what happened? So executives just didn't want to receive.
Yeah,
the
and
e-week
and
right.
you still also had
It's expensive.
advertising.
You
You
gotta
still
print it.
also had advertising to float the cost of production.
Right.
And since people were reading articles online before they went to print anyway, why are you paying money for something that people have already read?
Good point.
But,
Good point.
if you're talking about new revenue models for news, you're going to have to start taking a look at things where the act of being informed and engaging with either newsmakers or news chroniclers is going to be as much the product as the news itself.
Yeah.
And you can do that either through, here, you're subscribing. This is clearly part of your news consumption identity is you pay for this good and service. But you could also be, you're somebody who goes to see the Week in Tech Live, and you've paid money so that you can shout questions at these three while they talk with Leo, or we're going to give you a webinar, or we're going to give you an opportunity to sign up for a networking event, or things like that. I think you're going to see a lot more of that with publications, especially especially industry specific publications, where tapping into industry expertise is as much the part of coverage as breaking news. And I wouldn't be surprised if it went hobbyist too.
Just to pile on, Ford says the next generation Mustangs won't have AM radios in them.
Oh no!
Oh
What will people do?
Similar problem, right? Nobody listens to the radio anymore.
But they do. I mean, they do. But as a long time now retired radio hosts, Leo, I mean, people do listen in surprisingly large numbers, but not in a way that's worthwhile,
And not in a way that's growing. And
yeah.
I ask you, is there anybody under 40 who listens to the radio? I don't think so.
That's a great question.
Yeah.
I haven't listened to radio in years.
Yeah. So what are you defending it for?
I listen to a thing called podcasts.
Yeah.
You might have heard of them.
Yeah.
Some of them produced by radio programs, but
I
think
listen
that-
to classical music radio.
Well, you're going to be happy, but we'll talk about that after the break. I have to say, one of the reasons I retired from AM radio, which I'd been on for almost my whole life, is the revenue was dwindling. I wasn't getting paid.
Yeah.
You know, there really wasn't. So it's a very similar situation. And iHeart, who owned my radio show, has moved dramatically into the podcast business, and apparently makes as much money, if not more money, in advertising on podcasts than they do on terrestrial radio. But I did think it was
podcasts have come to a kind of a podcasts have sort of tapered off in the revenue growth.
Yeah, we're
too,
kind of
so a lot
suffering
pullback
there too.
Well, it's the saturation point. Yeah.
I don't know as much about radio, but I just on the print point, I will say, I mean, I worked at the information, and there were several articles that I wrote where I spent a lot of time, like months on them, and the number of people who subscribed, who actually like put down their credit cards, if you figure their annual subscribers, like more than paid for my salary.
Oh, that's good
for that year. And I think like what that kind of taught
that's
me.
encouraging.
Yeah, I thought it was encouraging, and I mean, obviously, it's a different. It's the tech industry, it's business. People can expense the subscriptions, blah blah blah. But it did teach me that like readers know what quality is. They can tell when you spend a lot of time and gave them new information, and they are willing to pay for that. And the price they're willing to pay may vary based on the type of thing you're writing about. But it made me think that there are subscription, maybe hybrid subscription advertising business models out there that can really work if people have the technology, if they're willing to roll the dice. I mean, it can happen.
Yeah.
We're also talking about this because we're people who, A, are willing to pay for this content, and B, we're in a position where we can.
And we make it. Let's not forget, we're on the supply side as well.
One of the perils that I think we should bring up is that you do have people who are on constrained budgets, and they should be able to have access to the same great content.
Absolutely.
And I think one of the things we need to look at is what kind of technology can you put out there that allows library users and school children and retirees and other folk to be able to use a library account to read a story in Bloomberg Business Week or to read a story in the Wall Street Journal.
I like that idea.
Simply,
do libraries buy those subscriptions?
They do.
Yeah.
Some libraries have them. Libraries are chronically underfunded, though. So this is it's. I mean, we're not going to solve all the. We probably could. We're all very smart. We're not going to solve the problem today, but
thank you for that vote of confidence.
What we've managed to do is identify that there's something innately broken in the model with how we fund news. Access to information is something that cuts across all income lines, and just buy access is an answer, but it should not be the default answer or the only answer we have to how do you fund good journalism? How do you get into everyone's hands? And for all that, I really don't like the reliance on social media to boost traffic. Like, I feel like chasing after traffic is more a black art than a science. And, do this for engagement, do that for engagement is a bad way to do journalism. I do think you have to acknowledge that for some groups, Facebook and Twitter are their curated headline feeds. And we have to be sure that we're not cutting these people off from a source of information or news.
So that's a very good point. We always have offered free versions of almost all of our shows. It was all of our shows, and now that we have a Club Twit, we have a kind of a patronage system. Yeah. We do have some stuff that's behind a paywall. But
I've got an actual, what do they call it, ATV antenna? What's the digital receiver? I have a physical one that I put on my roof and a Ethernet-based receiver, partly to watch Jeopardy, frankly. mostly broadcast, not found online. And it's fascinating to scroll through and see the sheer quantity of
My Pillow ads.
Sent over. No. There's a lot of high quality stuff being broadcast. Major networks.
So you're
networks.
watching broadcast television with an antenna.
Yeah, I mean, I can.
Well, you're in Seattle. I can't get broadcast here in Petaluma. We can't.
Glenn, I did the same thing. I did the same thing recently because I was paying $70 a month or something, and basically just watching like the football game that was on the local.
It was on for free.
network, and
And incidentally, in higher quality.
Yeah, we don't have cable
Yeah.
anymore,
It is-
so we
it
just have the
is.
antenna for the local stuff.
We gave up
You
cable 20 years ago, 18 years ago, and
But you live in a
occasionally-
metro.
Yeah.
Well, it's true. Well, but it's
Well, and-
between service stuff we can get from digital and streaming.
Right.
We're in the TV shadow, so initially we
Oh.
couldn't even get many DTV broadcasts, and then the towers got higher and moved around. There's more repeaters or something. But no, it is. I forget about that because a lot of rural areas are not that you're in a rural area per se, but non-metro
No,
areas.
we are in a
outside the
rural
reach of the
area.
metro.
Yeah, we don't have
We've
a.
served-
I can
is
get
it
channel
technically
50.
rural?
I get one channel, a UHF channel out of Santa Rosa.
Oh,
Channel 50.
That's the
no-
Mom
So
Pa
is it-
Kettle channel,
Yeah,
isn't it? It's 24 hours a
exactly.
day
There's
of
no
Mom, Pa
there's no
Kettle
jeopardy
movies.
on it though. That's
So is San Francisco the Sutro Tower the closest antenna? to
yeah,
Petaluma?
and it's too distant.
Oh my gosh,
It's too distant.
Interesting.
that's okay.
Reed, are you in the Bay Area?
I'm in Marin, so I
okay. So you can get Sutro in
Tower.
Marin, but you go a little bit farther
Yeah.
north.
That's amazing.
All we get is
All right.
KCSM. No, I don't know what it is. From Santa Rosa, Channel 50.
I used to live right below Sutro Tower. It was fun to hike.
I've been on top of. I climbed up Sutro Tower. You know, there's a mattress in a shack up there. I don't know why you'd want to spend the night.
I kind of do though.
Is that what that's
Imagine
for?
I thought you were going to say I used to get great signal there.
I used to get the signal was so good. You know, the signal was
If you
so
have the
good
right
it burned
fillings.
my hands. I came down.
What?
And I had
No.
spots on my hands. I told Tim. I said, Tim Posar, who's the chief engineer, brought me up there.
Tim
What-
Posar.
Yeah, you know Tim. What
Oh,
are
my
those
gosh, I know
spots?
Tim.
He said, "Oh, those are RF burns. Don't worry about that." And so far, I haven't gotten
close were you?
cancer. So now they make you wear a metal
Yeah,
mesh
yeah.
suit to go up there because the RF is so strong on that.
The funny part is Leo can now look at a bag of popcorn of unpopped kernels and they pop.
pop, pop. It's the only benefit.
That's the
Well,
side
see, now I'm
effect.
imagining
only
like those
benefit.
metal mesh suits like you were when you were diving with the sharks too.
It's just
So
like that, yeah.
You can basically go from Sutro Tower right over to the
sharks.
Farallones.
From Sutro to sharks.
A Faraday cage
It
suit.
is. It's a little Faraday cage suit. Exactly.
Oh, that's neat. That's weird.
Wow. That was a wide-ranging segment. Let's take a break. We went from Meta and Canada to shark suits, but anyway, we will take a little break and come back with more with our great panel. It's really nice. First time on, Reed Albergati, but it's like you've been here all along. I thank you so much for joining us. Technology editor from the excellent Semaphore, misspelled, but that's okay. Semafor. What is the?
That's
Isn't
right.
there an E on Semaphore?
It's with a it's with a PH and there's an E on the
Oh,
end.
it's
That's
PHORE.
That's the
Yeah.
English spelling, but I think the idea is that it's a word that means the same thing in a bunch of different languages. So you can kind of spell it
Also,
however you want.
You can't trademark an English word like that either, but if you spell it
Not anymore.
semaphore, as the people at Cool Tour Movies or something figured out, you can trademark it.
Well, I love it, and it's and what's the story with the tint on the page? Is there a story there?
Yeah, I think we want to be different. I think is the idea, and
It's good.
And I think it kind of like I'm not the one who came up with this, so I don't know if I can explain all the theories behind it, but I mean, it kind of gives you it's new and we're online and it's
different. Yeah, it's native.
But it also
Yeah.
gives you this sort of feeling of like
Newsprint.
a newspaper,
Yeah,
like
yeah.
old school, and which I think we are. I mean, we're all former newspaper journalists, I think, mostly, and it's a the business model is not exactly like it's a little bit like the newspaper model, like the sort of boutique advertising and that sort of thing.
I love it.
Yeah.
You've done a great job. And I take some
breaking
credit
news.
for
Can't
your
take any
homepage.
credit, but
I don't know if you know this. We had somebody, I can't remember who it was, on from Semaphore. And at the time, your globe was rotating the wrong way. The sun was rising in the west. And I mentioned it. And before the show was over, the little globe in the top of the page started
Oh, my gosh.
rotating.
It went the other way.
Start going the other way.
Leo, I have breaking news from 1893, which is that's when the Financial Times launched with its pink pages.
Pink pages,
It was
yeah.
a way to differentiate itself. So
Yeah.
it's as an old newspaper, as a printing historian, an old newspaper person, I'm always thinking about that. And so it's a callback to when newspapers might literally tint their pages to be pink or yellow to sort of stand out from the dull gray.
Yeah,
of
here's the
other
Financial
journals.
Times. It's still a little pink online, not as pink as the actual paper
That's right.
edition. And for a long time, the San Francisco Chronicle its date book section was pink.
Don't forget the
that?
sporting green page.
Called
For
it,
green,
the
too.
sporting green was green, and the date book was pink.
Just pour a little dye in the paper plant, and there's Bob's.
But now it's so easy. You just change your HTML or your CSS, and you got a little green. I like it.
It's good.
I think
Nice
newspaper
callback.
websites, like somebody pointed this out to me, and then once it gets pointed out to you, you'll see it everywhere. But like, they all look the same. I mean, you could be in mid. If you can't see the masthead, like it's hard to tell whose website you're on.
I know where we are when I'm at Semaphore. That's
So
a really
I wonder
good thing.
how many consultants like just made bank by going from like newspaper to newspaper. Oh, we've proven engagement on this. This is what people want, and some poor editor's like, yeah, fine, just do it.
It still goes on. ZDNet changed and got a whole new redesign, and then CNET did almost the same redesign, and so it's still happening. I think it's all going on still. Wonderful to have you, Reed. Welcome to the family. It's good to have you here, Alicia
Thank you.
Smizer, longtime member. I thought maybe there'd be Girl Scout cookies.
So would you like me to pop off about what's going on with Girl Scout cookies?
Yeah, what's going on?
Oh my gosh. So I ordered 4 boxes. I don't like raspberry. I'm happy to deliver some if you want me on next month. There we go. All right, that's fixed.
But it is the time. Last time you were on, you said, well, no, you have to wait till the spring.
Yeah. So originally what was supposed to happen was Girl Scouts of Northern California were like, we're going to have our cookie sales start in March because that should help with any supply chain issues, since Girl Scout cookie sales in 2022 were chaos.
Oh, wow.
There were huge supply chain issues. The baker that was responsible for Girl Scouts of Northern California, which is Little Brownie Bakers, actually was like, oops, we stopped making cookies. Sorry about that. Leaving the Girl Scouts, a volunteer workforce, I hasten to add, leading the Girl Scouts to have to tell angry customers, nope, sorry, you're not going to get your tag-alongs anymore. Nope, sorry, we ran out of Samoas, right?
Right.
That was last year's disaster. And so our council decided, all right, we're going to push back the starting date to March, because this gives the factory enough lead time to make all of the cookies that we expect we're going to sell.
Yes.
The factory still couldn't get it done. And as a matter of fact, owing to a 1-2-3 combination of a labor shortage and massive weather events in Kentucky where their bakery is located, and a breakdown of their logistics chain, they have managed to not only have delays in production of nearly all of their cookies, they have also sharply curtailed our online orders. So the only cookies we're able to sell online this year are the Thin Mints, the top. Yeah, I know. The Thin Mints, the Samoas, and like one other
I'll
flavor.
take a Samoa.
Right?
What about Raspberry Rally, which apparently is John's favorite, and it's brand new
So
this
here's
year.
the deal. Raspberry Rallies were supposed to be an online-only cookie.
Yeah.
And the idea was to promote use of the website, because 10% of the Girl Scouts' total sales are completed through the website. 50% of our sales are now placed online. 10% are online only. And the idea was, Raspberry Rally will help bump up the numbers on that. The site was supposed to go live at midnight on March 8th. However, again, owing to a glitch in Kentucky with the baker, the site went online at 10 p.m. on March 7th, and by 10:32,
And sold out immediately.
By 10:32, every last box of Raspberry Rallies that had been produced were sold out.
It's not exactly
Taylor
a failure.
Swift problem.
So it's been a little bit banana pants.
Next time, get Ticketmaster to sell them.
But long story short, in 2 weeks, I actually am grabbing like a group of 8 6th grade girls. We are unloading a truck next weekend to get the cookies.
That's how I used
and
to
I will
get
be
my
bringing
Coors.
home cases of Girl Scout cookies and dispersing them for the next month after that. So I'm so happy to be able to bring them up to Petaluma
So,
when we
John,
want them.
no
Amazing.
cookie for you.
And John, I promise you can have a box of Raspberry Rallies on me. There you go.
And this, when we're talking about Girl Scout cookies, we are not talking about GSC, an indica-dominant hybrid marijuana strain made by crossing OG Kush with Durban poison.
We were actually blocked from selling in front of dispensaries.
Because of this?
No, they're like, you shouldn't sell Girl Scout cookies
Oh.
in front of dispensaries because it's a
But
controlled
who is
substance.
hungrier
And-
for Girl Scout cookies?
Right? We were like, it's sales of opportunity.
I've got a story about Lisa's daughter. But I promised to tell the outset if this is the time. Might not be. We can hold it.
No, tell it, please.
Well, so years ago, I knew this guy named Phil Michaels. He was an editor at Macworld at the time. Now he's still at Tom's, right?
Yeah, he's
Lisa?
the managing editor of
He's
Tom's
still-
Guide now.
Yeah, exactly. Great guy, Phil. wonderful Hawaiian shirts. I'd only worked with him at Macworld. No, great guy. And then there's this person named Lisa Schmeiser, who I knew through the Incomparable podcast network. I was on podcast with her. Thought, what a terrific person. How neat. And on Facebook one day, I see each of them has had a child. I'm like, this is great news. And then slowly, it's like your eyes cross.
I
like,
can see where
that's
this is
the same
going.
child. They're married. Neither, it had never come up in my circle. This was implied. I was like, they both named their kid Trixie. You're like,
what a
it's one
coincidence.
Beatrix.
What a coincidence.
It was, my eyes went, oh, okay. It's one child, not two separate children.
Yeah.
And by the way, she's great. She was here last time you were here, and
Oh,
is
that's great.
absolutely adorable. Yeah. And not a baby anymore either.
No, she's a sixth
teenager.
grader now. It's
Oh,
unbelievable.
almost a
Oh, my
teenager,
gosh.
yeah.
I know. Oh my
That's
God.
great.
Yeah, she's
she's great.
she was great when she came by last time.
Yeah.
In fact, I was a little disappointed because I thought your husband and daughter would be here.
They're throwing an Oscars party.
What's that?
Oh.
What's the Oscars? What's that? What are you talking about? What are you talking about?
So-
We're gonna. No, I promise you, because you're gonna have 45 minutes home. If we end the show in 15 minutes, you might make it.
No, you know,
Tell
this is
them to
more
start-
fun. I don't have a dog in the race.
Fire
at
up
the
the
Oscars this year.
Fire up the
whereas-
TiVo.
Yeah.
We'll get your.
And there's
Oscar
no
picks
tech
later.
company that is nominated for Best Picture, right?
Isn't Netflix in the running? Isn't
Oh,
Netflix?
were they?
I can't remember. I thought
For
Netflix
something
had
that
the-
I
Was
thought-
Banshees of Inisherin
thought
a
I
Netflix
saw.
photo? A Netflix? No, because
No, I'll have to do some research.
I thought there was no streaming
Maybe
service.
you're
there's
right.
no,
Best
but there's no
Picture.
coda this
Steven
year.
Spielberg won.
Yeah.
Because he was the guy who said, you shouldn't be allowed in the Oscars if you don't put it in a theater like a normal person. All right. We'll take a break, come back with more amazing stories in just a little bit. Our show today brought to you by the password manager I use and you should use, Bitwarden. Okay, you're going to say, Leo, you told us that about LastPass 3 years ago. I didn't know. I'm sorry. I moved. You should move. Bitwarden. It's open source. That's a big, huge selling point. They're the only open source cross-platform password manager you can use at home, at work, on the go, trusted by millions. I switched. Steve Gibson has switched over. I tell you where open source really is an advantage in this area, because they're more nimble. For instance, significant updates to the key derivation function encryption, PBKDF2. We've been talking about that a lot on security now. It needs to be a high number. OWASP was recommending 300 iterations. Bitwarden is now upgrading all of you. New Bitwarden accounts, 600,000 KDF iterations. That's a lot safer. I moved it to 2 million, which Bitwarden's fast enough on almost every platform out there. I mean, if you can use it, it's fast enough to turn up to 2 million. But I got even better news. Because it's open source, a guy named Quexton, who is a Security Now listener, heard Steve say, instead of PBKDF2, we should be using memory hard algorithms like scrypt or Argon 2. He wrote an scrypt implementation, submitted it as a pull request to Bitwarden, wrote an Argon 2 implementation, submitted it. After consultation, they decided, let's go with the Argon 2. Argon 2 is now available to Bitwarden users. As soon as you get version 2023.2 or later, I turned on Argon 2, and it gives me great peace of mind. It's little things like that open source make possible. A guy can contribute it, they can analyze it, they can look at the code, they can make a decision to add it, and now it's in your hands. That's awesome. Of course, with Bitwarden, all the data in your vault, end-to-end encrypted. By the way, that's important. All the data, what sites you visited, when you visited, all the data is encrypted. Okay, that wasn't the case with LastPass. You can add security to your passwords with strong, randomly generated passwords for each account. You should be doing that. Never reuse passwords. Never, ever, ever. But you can go a step further with Bitwarden. You can use the username generator to create unique usernames for each account. Or unique emails. They work with 5 different email alias services so that you can generate a new email account for every single account, including our other sponsor, Fastmail. And Firefox. That's fantastic. There's also other new features in the February release. Master password security checks. New users who create their accounts on mobile apps, browser extensions, and desktop apps can now check known data breaches for their prospective master password using HIBP. That's built in. Logging in with a device is now available for additional clients. Login requests can be initiated from browser extensions, desktop apps, mobile apps. Share private data securely with coworkers across departments or the entire company with fully customizable and adaptive plans. We're moving over to Bitwarden for the business as well because, frankly, we need to. We think it's the only safe option. Bitwarden's Teams organization for the smaller businesses, $3 a month per user. Enterprise, $5 a month per user. What's great about Bitwarden is you always start with that basic free account. So everybody in your company creates a free account. They've got that now for all their personal passwords, then joins the organization, and now they've got both. And I talked to Bitwarden. They said our free accounts are always free and free forever because our business model doesn't rely on making money on free users. Now, I decided I was going to upgrade the premium account. It's only less than $1 a month. It's $10 a year. So I did that just to support them. If you want to bring the whole family organization in, up to 6 users, all premium features, just $3.33 a month. Everybody knows, you need to use a password manager. The one I use is the only one I trust. Bitwarden. It's the only open source cross-platform password manager that can be used at home, on the go, at work, trusted by millions of individuals, teams, and organizations worldwide. Windows, Mac, Linux, iOS, Android. I've used the command line now. One of our callers said, tell me about the command. Use the command line. It's amazing. Works with your YubiKey. Everything. It's fantastic. If you haven't done it, get Bitwarden. Free. Forever. Across multiple platforms. Unlimited passwords. You can get started also with a free trial of the Teams or Enterprise plan if you're a business, or get started for free across all devices as an individual user. Bitwarden.com/twit. Bitwarden, BITWARDEN.com/twit. I've tried them all. I've used them all. It's the one I use all the time. Bitwarden. Highly recommend it. Thank you, Bitwarden, for your support. We really appreciate it. And for the rest of you, people watching, if you do go to bitwarden.com, make sure you do the /twit so they know you saw it here. Bitwarden.com/twit. Back to the show. Trixie?
Yes, Beatrix. Yeah.
Trixie.
Trixie
to
her intimates, Beatrix is Beatrix to everybody else.
I like Trixie. Apple's CEO Tim Cook and Jeff Williams, COO, have apparently overruled Apple's design division. This is according to Mark Gurman. Against the wishes of the company's design team, they're going to release the first generation VR headset this year. This is the Financial Times, not Mark Gurman. Sorry. The timing of, I'll say it like the Times would, the timing of the mixed reality headset's launch has apparently been a cause of considerable contention at Apple. The company's industrial design team cautioned, devices in the category were not yet ready for launch and wanted to delay until a lightweight AR glasses product had matured several years from now. Tim said, no. Apple's operations team wanted to ship an early version in the form of a VR-focused ski goggle-like headset, probably to get developers on board. There's also rumors that this first one, which will be probably announced in June at WWDC, will cost upwards of $3,000. Interesting. Speaking to the Financial Times, former Apple engineers who worked on the device described the huge pressure to ship. Glenn, you cover Apple. This is unusual for Apple, I think, to have this kind of dissent within the ranks. No,
well, for us to hear about it, I think.
They're usually really tight on leaks. I'm wondering whose agenda is being carried out with this story is my question. When
you get this much information out there.
Yeah. Well, maybe I could see if you really thought this should not be released. Yeah. I don't want to have anything to do with it. You might go to the Financial Times and say, look, guys, this isn't ready for prime time. You might reasonably say users should not pay $3,000 for this, and I want them to know.
Does it mention in the story who this is for? Like, who do they think? Yeah. No, who do they think is going to pay $3,000 for this, and what are they using it for? Does it mention that anywhere in the story?
The only thing they said is the company's expecting to sell only 1 million units during the first year.
Yeah.
To whom for what,
all
though?
this
Developers,
reads,
right?
Yeah. I don't know. There's going to be a point. I am very uninterested in VR. I mean, it's sort of both personally, but I think also I don't believe substantial use case has been found outside gaming, and even then, it's got what feels like a continued limited use case.
Yeah.
So AR, but I mean, as a broad consumer applicable technology that could sell eventually hundreds of millions of units.
I don't think it's consumer. I think there's a lot of industrial applications.
Absolutely.
Yeah.
No, there are compelling uses that they're so niche they don't talk about them.
Yeah.
There's tremendous things you could do with it from a design and
That's
To me, that's the also ran. That's Google Glass. That's Google saying, well, they're still used in industry. That's
it's a segue. Remember the segue was it's going to transform transportation everywhere. And it's like, no, but it's really great in warehouses and for meter
and
readers.
for security people. And
Right.
Well, it's the same thing with like Microsoft HoloLens. Like my favorite,
also a flop.
well, my favorite use case for that is NASA.
Yeah, but look at the Army, which spent $1 billion and decided not to use it.
Yeah.
Because it's nobody wanted to
early.
wear it. It was making people vomit.
I'm totally excited about AR though, and I have been jumping up and down about AR for years, and it's the less sexy partner. But I'm like anything that does an overlay of the world. So my wife is deaf in one ear, and she uses a bone anchored hearing aid, which is paired with her phone, and so she has the superpower of being able to listen to music in her head, right, through Bluetooth, and take calls in her head. And I'm like, I want this augmentation. Like, it's great when it's a supplement, when it helps somebody. And I look at AR as an incredible combination of supplementation for people who need it and augmentation as a tool for the elderly, maybe for the young, for people in all kinds of industries, but also just as a daily life thing. I could see the utility of augmented reality enhancing what I do already.
I can take your wife's point of view because I'm good looking in my head. I can see.
I can hear how good looking you are in my head.
Yeah, in my head, I'm really smart.
I was really surprised. Well, I was really surprised when I discovered that one of my favorite use cases for my Apple Watch is when I'm in a strange city and my wrist buzzes to tell me when to turn left or right while I'm walking. Because
that's augmented reality, isn't it?
Yeah, because this way I'm not hauling out a map. I'm not looking at a phone. I can just go quick glance down. I don't look obviously touristy, which can be a concern in some places. I'm still stuck on this Apple thing. I'm stuck on who is this for and what are they doing with it? Like,
well, that sounds like
I kind of don't care about the palace intrigue. What I'm more interested in is if you're selling 1 million of these things, to whom, why, what's about to happen?
Why did Tim Cook do it? And the headline for Patrick McGee and Tim Bradshaw at the Financial Times is Tim Cook bets on Apple's mixed reality headset to secure his legacy.
I don't know. This all sounds kind of. I mean, there've been so many leaks and stories for the last several years about Apple's on the verge of this and that. Yeah. We know they have 1 million things going on in the lab, and for all we know, this is Tim Cook gives the go-ahead to spend another $500 million on this over the next 5 years and not take it to market this year. I would not eat a augmented reality, virtual reality headset if I'm wrong, but I mean, John Gruber goes into this in great detail and very fun, very amusingly. Is like everything is so ugly. Apple's not going to release an ugly headset until it looks like something Apple would release. It will not come out, and so I think that's a huge stumbling block.
Think it won't come out? You think actually this thing isn't going to come out this year?
I don't think it's a real thing. I don't think the hardware power combined with battery life and compact size, unless it'd have to be such a niche thing, there's no way they could sell 1 million of it. I could see them having an early developers kit that was not designed to be mobile, that was actually designed to be anchored to a Studio Mac or a similarly powerful Mac. So Apple has done that before, where they've released hardware early to developers. That's a advanced look at 6 months, a year, sometimes longer. So I can see them saying this is our hardware technology preview to give developers a chance for something that's coming in the future, and we're going to sell this to developers essentially on loan for X months, which is
so this is interesting.
Model of that.
So you disagree? You think the Financial Times is wrong, saying that they're going to come out with that this year?
I don't have the sources, but it hasn't passed my smell test.
Yeah.
I wrote about this a while ago, Glenn, and I actually came to the same conclusion without having the sourcing. But I thought that the AR headset was definitely not going to happen anytime soon, and they would probably shelve the VR headset as well. And I've been really surprised to read these stories saying that it's definitely coming out, because for all the reasons that you outlined. But I do, and I think AR, like an AR glasses in the sense that like they look like normal glasses.
Yeah.
Is a great. I mean, that's a great product.
But the technology doesn't exist is the problem.
Isn't there. And I looked into this. I went really deep on this years ago. I did this story on Magic Leap and what they were actually trying to build. And, you know, it turned out they weren't, you know, it was sort of like they don't have it, you know, was the conclusion. And I talked to all these people in the industry. I talked to people who had worked on the HoloLens, for instance, which I agree is an amazing piece of technology, but it was never going to, it just wasn't the form factor that was going to take off for consumers. People who worked on the HoloLens told me like AR is just never going to happen. And I'm like, never? And like, never. It's just, it isn't possible. And I think there is something to it. I think we've gotten so used to technology sort of progressing on this predictable exponential scale with Moore's law that we forget sometimes that like there are actual challenges to the physical world. Like for instance, getting light from somewhere over here into my eyes. And it's hard.
Well, okay. Do you agree, Lisa? You think Apple will not ship anything this year?
I do think there's a very strong point to be made that so much of Apple...
That they shouldn't.
Well, but it was about... There's so much of their corporate identity and so much of their price point justification comes around how well they nail aesthetics and design. Yeah. Because when you pay for an Apple product, you are effectively paying for the design experience.
They don't want to release a Google Glass or even a HoloLens.
So... Again, a lot of this story feels like palace intrigue to me, and I'm wondering if
Mark Gurman also thinks they're going to release it this year. He said the same thing.
I just don't.
He didn't have the internal conflict.
How does it fit? What we know about Apple is we know that they've been pivoting more and more of the revenue towards subscription services, towards recurring, repeating revenue. Right? Like this has been talked up in almost every quarterly call where they're talking about, we have this many more subscribers for Apple TV, Apple Music is coming along, repeating services, steady stream of revenue. Their hardware is moving to a point where it supports these steady sources of revenue. This isn't to diminish the fact that they still sell boatloads of phones and tablets and watches and computers, but they're looking at a different revenue mix. And the other question I have no answer to based on this story is, where does that headset fit into their plan to lock you into recurring monthly revenue? Like what product or service do they have that this headset amplifies or extends the user experience on? Or what service are they planning on putting out? Because right now I don't understand who this is for. I don't understand how this sets up an opportunity to bring back repeat customers for upgrades, especially if it's $3,000. You can buy like 2 MacBook Airs for that.
Yeah.
And
so this is an
use them as clamshell maracas, and you'd probably have a more rewarding user experience.
I am saving this clip, and we're gonna we get to December 31st, 2023, and there has been no VR headset. You guys are gonna get big gold stars. I mean, everybody and their brother says Apple's doing this. If Apple does go ahead, if this FT story is true, and Tim Cook's gonna force it, is it a flop?
It's just everybody wants Apple to have the next big thing, and I think
including Apple.
There's a media focus around it outside of the sort of I would say people who cover Apple and technology media, people who actually understand this. It's not to insult other reporters, but people would like a narrative that Apple has a new big thing every X year, like the iPhone. They had the iPhone, they had the iPad, they had the watch. And it's like, yeah, but each of those is a refinement of a different kind of idea around the same subject. So they're not going to have a thing that changes a category and becomes a multi-billion-dollar item every 3 or 4 years. What if Apple never had, and I say never, like in 20 years from now, Apple never had a product-defining category like the iPhone, iPad, or watch, which was an existing category again? What if it's feasible? Will they be still going to be worth $20 trillion in 2043?
But speaking of the next category, I mean, it seems like AI is turning out to be this new, the new platform.
Much to the chagrin of Meta, which has put all of pushed its chips in on VR. Microsoft has pivoted. Microsoft was thinking HoloLens was going to be it. Now they're all about AI.
No, they had both things going on. Like I went up to Redmond shortly before the pandemic and spent 2 days in analyst and press briefings. And literally a day and a half was us talking to different people, from their researchers to their business intelligence team to their Azure team, talking about what they were doing with AR, all the way down from the level of here's how we're looking at how we collect training data and how to detect bias or how to identify good data versus bad data, all the way up to here's how we're going to build out a suite of tools so that people can augment and extend the way they use data, up to here are the assistive bots and whatnot we're going to have. Like, they've been working on this for a couple years already. Like, the Chat GPT partnership is opportunistic.
Apple's been
and
working on
it's them
VR
surfing
for
it,
7 years, according to FT.
Yeah, but physics is not
7 years ago.
7 years is like nothing basically in mechanical engineering and physics. Like Reed was saying, you have to take into account like the realities of the physical world. And it's super easy to do stuff on a phone because the phone is a super closed environment in a lot of ways. It's small, it's held in your hand, you download things to it, you just need a network connection. Like VR, it's you in a bunch of wildly variable physical spaces with God knows what kind of connectivity.
But Reed, didn't we think the iPhone was going to be a flop? And we've seen this. There's no way.
Well, I was gonna say, I was gonna say that I think when everybody knew Apple was coming out with a phone, and they had this idea in their head of like, basically like an iPod that could make phone calls, right? Mm-hmm. And it turned out that they had this touchscreen interface that was so revolutionary. And I think there is a chance that they have some trick up their sleeve with this VR headset that makes it, cool or interesting in some way. Maybe maybe the resolution or the screen is so I guess the display technology is so good that you could just spend all day in this thing, right? I mean, that's the big limitation now with Meta. It's like you don't want to be in there more than a half an hour to an hour, right? And I think if they have some way of making it so that you could sit and do work on this thing and have like, your graphics all over around you, and I don't know. I mean,
Just imagine if they come out with this in like March 2020, Apple accidentally ships a VR goggle system that has to be plugged in to an existing computer. They would have sold 1 billion of them. Didn't matter how bulky it was, how ugly it was, could have had primitive graphics, and they would have made another $1 trillion.
To embroider a little bit on Reed's insight, one of the reasons the iPhone took off is it was very fundamentally social, because you could take photos and you could message people, and it turned into, again, like the computer you keep in your pocket, and shifted how we understand computing and how it's innately a social activity. And VR, if they're going to do VR and make it a social thing where you want to hang out and spend time because you're having communal experiences or you're having a meeting or something, that could be the killer app. I don't know how they'd do it.
Do you think we would have...
I don't work at Apple.
Do you think we knew, though, what those synergies would be in 2007 when the iPhone
I just thought they had a
announced?
great browser. I was like, I had just come off. I had just come off in 2006 trying... Yeah, I tried every smartphone available for that with any kind of Mac thing in 2006 for Macworld Magazine, and was like, wow, these all stink. Nothing's good. They're all using WAP, or they have their Nokia was the best thing out there. And then January 2007 rolls around. I go into a briefing in San Francisco, and Apple says, sure, you can play with it. And you're like, right, pinch, expand, browse. I'm like, okay, this is it. Because people just wanted to, I mean, this is what is fundamentally weird to me about technology, and everyone like, we need NFTs, Web3, AR, whatever. Like, people want to browse, they want to send email, they want to write a document. That is most usage. And gaming is this much broader, but like inchoate boundary thing. So it's like the iPhone did all those things. So everything else has been an extra bonus on top of that.
Admittedly, it would be hitting the jackpot. It would be amazing.
Yeah.
But they did it before in 2007, and I think that's why people are saying, well, maybe there is some secret sauce that Apple could add to VR.
Well, I think one of the gifts
if not, they got a flop on their hands, and that's not good. This is a big...
one of the things that Apple does well, though, is it puts together a beautifully designed thing that does XYZ, and then people still find stuff to do with it that expands its market and its utility.
Same thing for Twitter, right?
Well, it did because it did it with the phone. Because again, once you're like, ooh, I have something where I can talk to people. I can take photos. I can send photos.
Every great tech product, that's been the secret to its success.
Because here's the thing:
we didn't know we were going to be able to use VisiCalc on our Apple IIs.
To get back to the Apple thing for a minute there, what and this is purely this was actually covered in the New York Times a couple months ago, and I can corroborate it with anecdata. I don't want my kid to have a phone yet. We're not. I don't want her to have untrammeled.
That's great.
Yeah, I don't want her to have untrammeled access to the internet. I don't want her to have untrammeled access to social media, but I do want to encourage independence and let her run around the island with her friends.
You're at a very
and
difficult
chat, right?
time right now because she's on the edge of innocence, and you want to keep her there.
Well, Apple Watch has been great though because we got to watch we got to watch where she
with the kid feature, so you could
she can
set
call
it up.
us. She can call us and
solves the problem.
And it's on a parent
and you
thing.
know where she is.
And all of her friends have it. So she's got group chats with her friends. She doesn't feel like she's missing out socially. She gets that autonomy and independence, and we get what are effectively
That's
training
just
wheels.
lucky though that there was an intermediate device at work.
But like that's the thing is Apple didn't design the watch for that. Like
they didn't know. Yes.
Yeah, and it was pretty evident. They were like, we're doing this for health. We're doing this because it ties into the rest of the system. But people were like, okay, this does exactly what I need to do for this completely unanticipated
watch is a great
scenario.
example because at first it was like a sidecar for your Apple. It's like, what's the point?
Yeah.
And they slowly found, and it was different for everybody who used it, that sweet thing that.
Yeah.
So that serendipity is what Apple needs for this VR thing.
And that's the thing is if you can find that where there are the use cases and people, this is fantastic. But if you can find that thing where people are like, oh, this actually fulfills a social or a vocational need in a way that's much more elegant than my current setup, like that is where you'll get your million headsets.
Here's a parenting tip too is we did this with my younger kid who's now almost 16, and they had a very simple phone that we basically left in the house. I know, and crazy, right? And we let them buy a watch, but they asked us to buy a watch. We let them use their own money from dog walking. So we gave them permission to spend their money. That's a parenting tip, just tell you. And worked great for a few years.
Yeah.
I keep giving my kids Apple Watches or trying to, and iPads, and they don't want them. They don't want nothing to do with them.
I think so. One killer app, like when you talked about this, like what is a killer? I mean, I'm looking over at my office now. I just got like monitors all over the place because I can never have enough screen real estate.
Imagine strapping those to your head, Reed. Life would be different.
Oh my God, the Iron Man dream where like in all of the Marvel movies and they have all the...
See it all.
I absolutely want that. That would be amazing.
If you need monitors, right? Like if you could just put this thing on and you don't need a monitor anymore, like that alone is probably worth the money, right? Because I think so, because you sort of like you have your workspace around you, and then
what if somebody sneaks up behind you and bonks you on the head?
You obviously you have a rear view mirror.
Oh, you have
too.
a rear view mirror.
Like that's got to be part of it too. Is the
that's your services. That's your services revenue right there. You pay for somebody to monitor your rear view camera. But I mean, if you could just take that thing off and then you have this nice clean desk and you could do whatever on that. I mean, I think that makes sense, but I am very skeptical that they have made that, because just based on the technology that's out there, it doesn't seem like it's not quite there yet, but I could be wrong.
Wow, this is great. This is the first time I've had a panel where they said, no, that's not going to happen. in the face of all of, these articles from Gurman and the Financial Times and everybody else, no, that's not going to happen.
It's just physical reality. Remember Bloomberg had that weird article a few years ago that said like the Chinese are sticking secret chips and everything. And when it came out, I read this and said, this doesn't make physical reality sense to me. It doesn't make manufacturing sense to me. Hardware, it must be me. I'm missing something. Then you got these expert opinions, including by people who were quoted in the article who said it's not really exactly what I was. They only quoted this part. They didn't quote the explanation. And then no other news organization of any kind has ever replicated anything Bloomberg has reported. So I know Bloomberg's a reputable organization. The people involved were all reputable, but it has that smell to me here of where I'm like, this doesn't match my understanding of current manufacturing capabilities combined with Apple's marketing thing. And Reed, you're in the same boat, Lisa in the same boat. We're all, I don't see how they get a battery, screens, the technology, have it, even if they work on it for years, we're just not there. Maybe in 5 years.
Has
But
anybody
self-driving cars are
reporting on
coming
this
next year.
bothered to go romping through the patent archives to see what Apple's been patented? No, I'm serious.
They've
like,
patented
a bunch of
everything.
weird
I mean,
stuff.
they have
like
they
look
have
through the
so many
patent.
patents.
Like look through the patent records, and then the next thing you do is you take a look at what are their manufacturing loads in China, because I know this is how other Apple product news has been broken, is people figure out.
Right.
Like, has anyone tried to do this yet for the presumed million headsets that
Well, a million is a low number compared to iPhones, right?
Yeah.
And that's one of the problems with iPhones is they can't do anything too crazy on an iPhone because they have to make so many of them, right? And maybe they don't want to make a lot of these, so maybe they'll price it really high, and I don't know.
Listen, Lisa, here's the logic. If they were going to ship that this year, it is already March.
Yeah.
They are manufacturing that now. If it were to be out in time for Christmas, there would be reports of tiny displays and other ancillary things that would have to be made by third parties, plus the battery demand on something like that. There would be leaks. There's no way they could be producing. They would literally have to be manufacturing that like now. It would be being assembled in the next 2 months or something to ship in September or October.
And aren't there usually just an army of Apple bloggers who are like all over this, where they're like, oh, we found out from somebody in Shenzhen that they're working on.
But maybe if they're only making 1 million of them, it wouldn't make as much of a dent. I mean, remember, they make hundreds of millions of iPhones.
No, but they got to source 2 very specific per unit screens for it that are very high resolution. There's just all this stuff. Now it could be that they're geniuses, and they clearly are in the marketing sense, and they set up a factory someplace that is totally dedicated to making a prototype. They dropped hundreds of millions of dollars to building certain things and taking resources from elsewhere and repackaging them, so that we don't know that they took screens that are usually made into bigger screens and made them into tiny screens. But it just doesn't. Yeah.
Nothing about this story makes sense.
Oh my gosh, this is great. I can't wait to bring this to the panel on Mac Break Weekly and have them throw stones.
I
at you
don't
guys.
want it. They're not making it.
They're not
going to
make it. It's great. You sound like Dvorak. That's nuts. Nobody never makes that.
That Gruber guy is going to write a column about us.
Actually,
he's pretty bearish or bullish on it, I should say. No, bearish.
Everybody thinks it's going to happen. And I agree with all of you that every piece of evidence we have is that VR is not something people want. It makes 11% of the population nauseated, which is not an insignificant problem for any consumer product. I think that maybe if Tim Cook is forcing this against the better judgment of its engineers, this could be a huge mistake for Apple. But if it's only 1 million... that's not very many. Maybe they need to get developers on board so that in 3 years when there's an AR headset, they've got a market. I don't know.
$1 million is $3 billion if it's $3,000 each. It's not a small amount of
That's
money.
true. It's a business.
Which means their expense is $1.5 billion, $2 billion with their margins or less.
Well, they can
And it means
afford that. They can afford
and they've already invested. No, it's true. They've already invested billions. I mean, we know Apple has things in the lab that would make our hair curl because it's so cool and interesting, and it's not productionable. It can't be produced in an efficient way. So we know they're doing this.
Yeah, the car.
Hasn't Apple been doing automotive stuff now for years?
A wearable car.
This is great, though. I mean, I swear to God, you guys are going to look like geniuses at the end of the year when it didn't happen. And I swear, everybody else says, "Oh, of course they're doing it."
Or we're going to look like Steve Ballmer if it does happen.
Yeah, right.
There's the biggest hit ever.
There's a downside.
I'm feeling good about Steve Ballmer because his recent and bathrooms in the stadium thing it identified a user pain point and he leaned into it, and I don't think that's a bad move.
I think Reed's talking about the part where he said the iPhone's never going anywhere.
Oh, that part.
That was the reference. Thank you.
No, I'm here for new Ballmer.
He might be right. He might be right about bathrooms, but he was wrong about the iPhone.
Yeah.
Classic Ballmer was too salty, but new Ballmer, very sweet.
Yes, exactly.
Let's take a little break because there's a lot of little stories. I want to get them out of the way quickly. But before we do that, I want to talk about our great sponsor, Kolide, Kolide, a device trust solution that solves a problem a lot of businesses have. Unsecured, insecure, dangerous devices accessing your apps. Kolide has some big news. If you're an Okta user, Kolide can get your entire fleet to 100% compliance. Kolide patches one of the biggest, the best, the worst, I guess, holes in a zero trust architecture, which is device compliance. I mean, think about it. Your identity provider only lets known devices log into apps, right? Right? But just because a device is known doesn't mean it's secure. In fact, just ask LastPass, right? The DevOps guy had access to the S3 buckets. He also had an out-of-date Plex. Bad guy was able to get in, and disaster, reputational business disaster for a company. Plenty of the devices in your fleet probably should not be trusted. Maybe they're running out-of-date OS versions. Maybe they've got unencrypted credentials lying around. Maybe they're running an out-of-date version of Plex. If a device isn't compliant or isn't running the Kolide agent, it just can't get in. It can't access the organization's SaaS apps. It can't access the other resources. The device user can't log into your company's cloud apps until They have fixed the problem on their end. It's that simple. I mean, wouldn't it have been awesome if the DevOps guy had gotten a message from Collide saying, hey, we'd be glad to let you in, but first, could you update your Plex? Problem solved, right? A device will be blocked if an employee doesn't have, let's say, an up-to-date browser. And the best part of this is the end user fixes it. So it doesn't burden your IT team. The end user is going to remediate the problem. They learn what's wrong. They learn how to fix it. They fix it. And it drives your fleet to 100% compliance without overwhelming your IT department. Without Collide, IT teams have no way to solve these compliance issues or stop insecure devices from logging in. With Collide, you can set and enforce compliance across your entire fleet. And it's completely cross-platform. Macs, Windows, Linux. Collide's unique. It makes device compliance a part of the authentication process. So when the user logs in with Okta, Collide, the Collide agent, alerts them to compliance issues, prevents unsecured devices from logging in. It's security you can feel good about because Collide puts transparency and respect for users, that's really important, at the center of their product. To sum it up, Collide's method means fewer support tickets for you, less frustration for your end users, and most importantly, 100% fleet compliance. Collide, you got to get this. KOLIDE.com/twit. Learn more, book a demo, collide.com/twit. We thank them so much for their support of the show. We love Collide, and we encourage you to try it. And please, if you do us a favor, Collide, KOLIDE.com/twit. This was a fun week this week on Twit. Such a good time. Some amazing guests. We made a little movie for your enjoyment. Watch.
You have a sales staff selling the unique value. What the hell was that?
Miss Stacy, you should mute when you do.
Stacy was closing.
Sorry, I was just making.
Why were you
noises.
scratching? Don't scratch in the
Don't be
windscreen.
scratching
your windscreen.
Just after a certain point in time, you lose me, and then I'm like, "What's this dot here? Let's see what it is."
Previously on Twit. This week in space.
We're joined by the king of science awesomeness, Bill Nye.
I want to find evidence of life on another world while I'm still alive. That just would mean the worlds to me. Does it have DNA?
Right.
Little Martian microbes, little Mars probes. Are they a whole nother thing?
iOS Today.
Rosemary Orchard and I are joined by the one and only Shelley Brisbane to talk about her book, iOS Access for All.
Security Now.
We are going to encounter a mystery and solve it. When I read from a Chick-fil-A data breach report, which disclosed that 71,000 Chick-fil-A account holding customers had their accounts breached, I was skeptical. Why would some random hacker be going out of their way to compromise the accounts of Chick-fil-A customers? Why not Chase, Bank of America? I mean, Chick-fil-A? Really?
Twit. It's what's for dinner.
After that show, I had to go out and get a bucket of Popeyes. I admit it. I admit it. Didn't go to the Chick-fil-A, but, I had to have something. The great Steve Gibson, and a great week. Thank you all for being a part of us. And also a special thanks to our Club Twit members who make so much possible. We wouldn't, for instance, have This Week in Space if Club Twit members hadn't supported it in the early days. We can't launch new shows because they don't have a big enough audience. They don't have advertisers. It costs us money. And the $7 a month you pay as a member of Club Twit makes those shows possible. We've got a lot of stuff in there that we hope someday we can make public. Hands-on Macintosh with Micah Sargent, Hands-on Windows with Paul Thurrott, the Untitled Linux Show with Jonathan Bennett, the Giz Fizz with Dick D. Bartolo. I can go on and on. Stacy's Book Club. The club makes that possible. You also get access to a Discord that is second to none. It's actually the best social network I've ever been a part of, because these are all great people, all Twit listeners. And by the way, the conversations aren't just about Twit shows. They are about all the other things geeks are interested in, from comic books to coding to cooking to ham radio and pets and photography, science, software, sports, and travel, and on and on and on. Hang out with us in the Discord. Get ad-free versions of all the shows. support development of new shows, and get the Twit Plus feed with some stuff that no one else gets any other way. It's a simple thing. Join Club Twit. Just go to twit.tv/clubtwit. I won't harangue you. I thank you for your support. Now more than ever, we really need this support. It really helps us a lot. Twit.tv/clubtwit. So you all got here on time, even though the clocks, for some reason, mysteriously in the middle of the night changed. Is this a medieval thing? No, actually it's not. It's from the 70s. But it feels like this is just some sort of medieval torture. Do you agree with me? Should we stop this insanity?
Yes.
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 I have a 5 and a 6-year-old, so yes.
Oh, see, they don't know. They didn't get the message.
No.
No.
Mommy, Daddy, it's 6 a.m.
I feel like we should make the It Gets Better video for you because, like, once they hit puberty, they'll sleep in. I promise.
Yeah. They still hate the clock change, though. I bet you Trixie's not a fan.
Oh, God, watching her stumble sideways out of the room at 10:08 this morning was really funny.
10:08. Oh, my God.
I don't know what the answer is. The American Academy of Sleep Medicine says the switch to daylight saving time, which we just underwent this morning, carries many health and accident risks and is misaligned with human circadian biology. They want to move to permanent standard time.
Yeah.
Others want to move to permanent daylight time. Now, I'm glad you're here, Glenn, because it's easy for people in Florida. Marco Rubio has a bill. It's easy for people in Florida to say, yeah, let's stop this because they have a lot of sun. But you're up in the north where if we went to daylight saving time, your kids would be, your kids would be going to school in the dark.
Well, they go in the dark. I mean, kids go to school in the dark now if they were going to school. Whole other discussion. No, if they were going to physical schools, one has graduated. We get in Seattle, the light comes up in the winter at like, I don't know, the sun comes up at, what is it, like 8 something a.m. and it goes down at like 4:30, and we have a hill nearby. So
this doesn't fix that
Twilight's
problem.
3:30.
You got 8 hours
a
of
short
daylight.
day.
That's all you get anyway, period, no matter what.
Our kids used to go to school. They'd get up in the dark. They'd come home sometimes in the dark. And that's just life. In the summer, when daylight savings kicks around, like, I don't mind if it's offset by an hour. We get 18 hours a day or something. So it works out here. 17 hours a day. We don't get 18 hours. We'd have to be a little further north for that.
No, like the strangest thing was being in Paris in June and it not getting dark until after 10. Well, we went for the Women's World Cup in 2019 and it didn't get dark until like 10:30 at night.
Would you be in favor of summertime or wintertime? Which one would you like to make permanent? It's easy, by the way. The U.S. time zone is standard time, right? Whatever it is in your time zone. But that's an official time zone. If you wanted to make it saving time, I think that's a little more complicated, right? Because that's changing our time zone.
Yeah, some parts of the United States don't change their time.
Arizona doesn't.
Hawaii
doesn't. Yep.
Yeah.
Counties in Indiana, if I remember right. Yeah. Counties in Nevada.
That was weird because my first wife lived in Ohio, right over the border, and you'd go a mile, and the clocks would jump back an hour. It was very weird. Let's just all figure this out, can't we?
Could be in China where there's one time zone for the entire country, which is historically problematic. Or Spain where because of the fascists, they set the wrong time before World War II, I think.
Generalissimo Francisco Franco, he's at it again.
So if we've got statistics on like if it's bad for your health or if it leads to
heart attacks, crashes.
Wasn't there something about like more kids getting hit on the way to school?
Yes.
Yeah, like just pick a time.
Just pick a time. All right, we're all in agreement.
I particularly like that we changed the time so that older clocks that had built-in daylight saving time broke, and that also for 2 weeks we're out of sync twice a year.
Oh yeah, because we extended it.
Yeah.
So it's that's ridiculous.
Yeah. I was arranging a call for Pants in the Boot, the language podcast I do over at The Incomparable, and we had people from it was during a daylight transition, and we had someone in New Zealand and Sweden, and we did manage to use a world clock and get everybody in at the correct time, but we were across 5 time zones and 2 different daylight saving standards.
Galia, who lives in Israel, doesn't have this problem, but she notes that Arizona doesn't do daylight savings time except for the Navajo reservation, which does, except for the Hopi reservation within the Navajo reservation, which doesn't, which is like having a freezer and an icebox in a heated house. It's math. It's too hard. Let's just stop the insanity.
Someone in the Discord is posting GIFs and reactions.
Oh, we got lots of GIFs.
Actually, the post-pandemic, like everyone working from different places, will accelerate that too. We'll push people to move toward one time zone.
Oh, that's interesting because we don't go outside anymore. We don't even know where the sun is.
Well,
one world, one time.
I'm not against the idea. I mean,
I have an editor who lives in Newfoundland, which is actually like a half hour
that's their
ahead
problem,
of Eastern Standard Time too. And one of the things I've ended up using a whole lot in Outlook is the ability to display multiple time zones at once. So just so I can try and schedule meetings and not really impact disproportionately the people who live in the UK and the people who live in Newfoundland, or me, frankly, on the West Coast.
Technically, I think we should all be using sidereal time, so it's depending on where we are when the sun is noon overhead.
That's right.
It's always automatically calculated by our watch.
There you go.
Offset, so all of our appointments
we change by a minute every day.
I guess that
in our own zone.
This comes back to the eternal question: does this need to be a meeting, or can it be an email?
Yeah. Well, it would eliminate a lot of meetings, I can tell you. Gigi Sohn, this is sad. This is not good. Gigi Sohn. This is very frustrating. Currently, the way it stands, the FCC has 5 commissioners. Well, 4 commissioners and a chairman, 2 Republicans, 2 Democrats, and a chairman, usually of the party of the current president. In this case, it would be Democratic. Congress does not want to approve Biden's nomination for the Democratic commissioner, Gigi Sohn. They fought for months, 16 months. Her nomination has been stalled. She's finally withdrawn, which is a loss for all of you listening because she understood net neutrality. She was fighting for the good fight for us, not for the telecommunications industry, which is, of course, why, certain members of Congress decided and cable and media industry lobbyists decided to hit below the belt and attack the fact that she was gay. And, it's appalling. It's appalling. It also means that there's a 2-2 split, which means a lot of the things that we would like to see the FCC do to make the world a better place won't happen.
Thanks, Joe Manchin, among other people.
Yeah, Joe Manchin. Well, it's also thanks to the influence of money in politics because a lot of billboards were bought in states where Democratic members of Congress were in, purple states where their seats were kind of at risk. So Mark Kelly of Arizona is against it. Let's see. There's, I think, a Nevada member of Congress who didn't support it. And if you don't get those votes, you can't get the nomination through.
It's just so frustrating, especially after they put Lena Khan in as the chair of the Federal Trade Commission. I'm like, the distance between Gigi Sohn and Lena Khan in terms of like where they are on the political spectrum, how they align with Biden's positions on regulation, it's very small. Gigi is absolutely qualified. She has all the history. We know all about her. We know where she stands. She doesn't, the problem is when people don't have vested interest, that makes vested interest very unhappy. And I think that's what happened.
Among the groups opposing Gigi Sohn was the Fraternal Order of Police, who criticized her rights, her tie to the Electronic Frontier Foundation, her ties, because the EFF is fighting to protect encryption, and the Fraternal Order of Police wants law enforcement to have access to encrypted data, and since the EFF is fighting for it and she is somehow associated with it, the Senator Jacqueline Rosen from Nevada, the Democratic senator from Nevada, also didn't vote for her. So
Biden didn't put, Biden didn't do a full court push on her.
He didn't.
I don't think
he didn't support her in the way he
his
should
administration.
have, perhaps,
his administration didn't see it as important a fight to get her in place, and he should have, because I think it affects, the role of the FCC has overseeing media.
It affects some of his infrastructure plans too, because that has to go through the FCC, and
especially since he's pushing to make more tech infrastructure defined as infrastructure, as we understand it.
Good. There is some good news coming out of the White House. The administration has proposed a new security framework, which, interestingly, would hold software companies liable for security issues with their software.
They've been pushing for this since they got into the White House. If you take a look at the first year of the Biden administration, almost every month there was either an executive order or a meeting with somebody where they've been really focused and consistent on the messaging that companies need to be held responsible for data security. Data security is a national security issue. Companies have an obligation, if they're going to operate within the U.S., to uphold a reasonable standard of security for both nation and its citizens. They've been hammering this message home for years, for 2 years now, and this honestly just feels like more of the same.
They also now say that cloud security is a huge problem.
Yeah.
Government is saying they're embarking on the nation's first comprehensive plan to regulate the security practices of cloud providers like Amazon, Microsoft, Google, and Oracle. Because they say if it's disrupted, it could create a large, potentially catastrophic disruption to our economy and our government. It would take the internet down like a stack of dominoes. So that's, I think,
it's a
sensible.
really broad stroke. There's a lot of regulatory issues in cloud computing that I think we're going to see both state and federal governments and diplomatic organizations grappling with for the next few years. Because in addition to just the data security in the sense that we don't want bad actors hopping onto our hosted cloud service and sucking down everything, you're also going to have industry-specific compliant issues along the lines of our industry requires all conversations to be recorded.
Right.
These recordings have to be secure.
Right.
And you have to be able to guarantee the methods of security up to our country or our state requires that this data has to be kept secure and private, and you have to make sure that individual users' privacy is respected in all cloud transactions. And what we've seen from companies overseas is especially the EU is on this, like cheese on a pizza, where they're arguing it doesn't matter where the data is hosted. What matters is if people within the EU's jurisdiction are affected by how you're hosting the data and what the privacy measures are. And since one of the chief attractions of the cloud is you don't have a one-to-one, the data's in this physical location, I'm in this physical location, that's it. We're genuinely looking at something where the U.S. is going to have to really coordinate aggressively with other countries on what does it mean what are the minimum security requirements? What are the minimum privacy requirements? What are individuals' rights when it comes to their data in the cloud or their privacy in the cloud, surveillance, et cetera, et cetera, et cetera. This is, again, I feel like the Biden administration is kind of very carefully and quietly building up a comprehensive national security policy, and they're doing so in a way where how does this advance the interest of something like Microsoft, which has been talking about this for 7 or 8 years now, like, how can we advance the interest of all of these U.S.-based cloud providers who are operating in the U.S., in the EU and Middle East and the Southeast Asian markets, and make sure they can do business without a lot of friction.
A good thing. Yes, we need it, right?
Yeah.
Okay.
I think it's with security. It's about incentives. I think these companies, it's viewed, security is just viewed as this like lost leader, right? A cost center, I think, until it takes the company down or, something along those lines. But it's been a real source of, like you said, national security issues and information flowing to China. And I think companies haven't really been bothered by that so much because it doesn't affect your quarter to quarter.
It hasn't affected their bottom line yet. Like when it's more expensive to not comply than it is to pay a fine, then they'll comply. But I think this might actually be part of what the Biden administration is doing too, is beginning to be like, okay, how can we make this hurt?
But at least we're going to ban TikTok, and I think that'll solve the problem, if you ask me.
Where will we learn our dances?
That's right. They won't have there's no data.
No problem now. It's all safe. How many, show of hands, how many of you have a video doorbell? I do. I have the Google Hello, not you. Reed, do you have one? No?
Got a Ring.
Ring. And Glenn, you got a Ring or a what
I have an encrypted end-to-end bloody blah.
Oh,
I don't have a
up.
doorbell.
Oh, you don't have a doorbell. You know what? That's what I should get rid of.
I got a doorbell.
Who needs people to ring the doorbell? Forget
I got
the
a doorbell, but It doesn't have a
Send a
camera on it,
text
but I have a
message.
camera nearby that uses HomeKit for end-to-end.
Oh, there you're a little safer.
Okay.
Politico story, wow, gave me kind of shivers. Michael Larkin, business owner in Hamilton, Ohio, last Thanksgiving got a call from local police. They said, we see you have a Ring doorbell, and we're surveilling a house in your neighborhood. Can we have the footage? His doorbell was among 20 Ring cameras that he had in and around his house and his business. 21, but it was business too, right? The police said they were conducting a drug-related investigation on a neighbor. They wanted videos of suspicious activity, small thing, between 2 hours, 5 and 7 p.m. one night in October. He said, I see the same car driving by 12 times in that 2 hours. Let me send you the video. I think you're onto something. He thought that was all the police would need. They asked for more footage, now the entire day's worth of records. And a week later, he got a notice from Ring itself. The company had received a warrant signed by a local judge saying, we want all 21 cameras. We want all footage, indoors, outdoors, even from your business, which is not even near the house. And they're going to give them, and they're going to hand it over because it's Ring. They said, well, fine,
Well, no, they didn't fight it, right? They got a search warrant.
Yep.
Right. It's part of Amazon, just to point out, and Ring has also added end-to-end encrypted data, so you'd have to
you have to go to Amazon.
You have to go to the individual to get them to retrieve it. You have to actually serve a warrant on a person.
So had he turned on encryption, he would have had to give him the footage, not Ring.
Yeah, conceivably, and I would imagine that would be a more complicated process. I think the police can more easily get a judge to say, Company X has video we need, it happens to be owned by an individual, then this individual, we need to go to their house and compel them with a judge-signed order to deliver us stuff, at which point, is that person, if it were me, am I suddenly thinking, do I need to spend $20,000 on a lawyer to defeat a subpoena about if I actually felt principled about this and want to do that? I don't know. It's still a big burden.
Yeah. Just a word of warning.
And there's nothing in there that says how long they can keep the footage or
what they have to disturb.
Well,
I gave my footage to a cop once. They came, they knocked on the door and they said, there was a van driving around and they asked a kid if they wanted to get in the car. And I thought, well, if there's ever
so
time
you wanted to help.
Your footage,
yeah.
Like, okay, here's the footage. And it turned out it was like a parent of one of the friends who actually was knew the girl, but she didn't recognize him. And it was all fine. But
that's, I think that's a reasonable request. And I think it was good that they asked you and you said, yes, it's fine. It's not that we don't want to help the police investigate this stuff, but that's really overreaching to say, just give us everything you got on this guy. He wasn't even a suspect.
Everything forever. Yeah.
Well,
often it turns out it's not. It just isn't that useful.
That's right. That's the other side of it, isn't it? Yeah. Hey, good news. YouTubers can swear in their videos again. Gosh darn it. It won't be demonetized anymore. I guess they heard from YouTubers saying, hey, what are you talking about?
Using very strong
what the F are you talking about?
Demonize, not demonetize.
Demonize, don't demonetize. And finally, Apple's finally going to give us the replacement for Prime Phonic. A year and a half ago, I love classical music. I was a subscriber to this classical music service. Apple bought it. Within a week, cut it off. I got a refund, but I said, Apple said, don't fear not. We're going to add this. We're going to have our own app. A year and a half later, finally, March 28th, Apple Music's classical app will launch. It's about time. I don't know what took them so long, but it looks pretty good.
Metadata. I'm going to guess it's a metadata.
It's all the metadata. Yeah. But they had it from
very
Prime
carefully.
Yeah.
Okay, fine. What a great panel for all of the stories we had this week. Reed Albergati, thank you so much for joining us. Now that you've been here and it's not so scary or horrible and it's only 8 hours of your life, you'll come back, I hope. Yeah?
Definitely. I'll plug in my laptop next time.
Yes.
It'll be great.
Anything you want to plug?
Thank you.
Speaking of plugs?
No, you talked about Semaphore. I would just add that our newsletter is free. Sign up for the tech newsletter. I think you'll like it. And that's about it.
Yes, I do like it. It's very good. And I also actually go to the website and read stories in your beautiful colored paper. So
our yellow site.
Your yellow site.
It's great.
I
Easy
love
on the
it.
eyes.
I'm really pleased. I was a little nervous, because Ben and Justin were a little cagey about what they were up to. Turned out great. And they hired one of the best tech reporters out there. It's great to have you on the show. Thank you, Reed. I really
fun. Thanks for having me.
Lisa Schmeiser, next time you got to bring the fam. I guess they're having fun right about now as the red carpet
I'll bring them
begins.
next time. I'll bring cookies next time.
Did I say anything? I guess I did.
Getting on a plane.
Yep.
Lisa, of course, is at Jitter. No Jitter.
No Jitter.
Sorry.
Yeah.
No Jitter.
And I'm excited to report that Enterprise Connect, which is a show that I'm also the co-chair for and covers the communications and collaboration space, we are held live at the Gaylord Palms in Orlando, Florida from March 27th to 30th this year. But we also have an option to stream the entire event virtually where you'll have playback. So if you feel a little bit iffy about traveling or you're like, oh, this is the first I'm hearing of this amazing show, you do have the option to go virtually. We're going to have full coverage on No Jitter for the whole week we're there.
Nice.
And post-show synopsis and analysis for the week or two after as well.
Very nice. Orlando, Florida, 2 weeks from today. You can find out more at nojitter.com or enterpriseconnect.com.
Yep.
So this is the big annual thing.
It's a big annual thing.
Yeah.
Yep.
Is it fun?
I loved it. Last year's my first year in person, and what I really got excited about is you get everybody from folks who make it their mission in life to figure out how to wire hospitals for the best Wi-Fi everywhere.
Cool.
And it's astonishing to talk to people who get deep in the weeds with how is this going to work in radiology? How is this going to work down in pathology? How is this going to work in NICU? And they'll explain all of the different considerations they have. That was great. And then you also talk to people who are responsible for migrating 200-year-old companies onto a unified communications platform, and they'll talk about, all right, my challenge was how do I make sure people can get access to records that have been stored on a mainframe? It's just a really great opportunity to talk to people who are super passionate about supporting people's ability to collaborate and communicate, and they recognize that there's so many different obstacles to doing it and so many different conditions in everybody's everyday working life.
Hear from your enterprise peers at the leading communications and CX event, Enterprise Connect, coming up in 2 weeks.
These are the folks who are figuring out how to keep people working virtually
Nice.
and how to do hybrid work. And
busy
to hear
time.
them hear them talk about the considerations they have.
Nice.
It's really nice to get outside of the I sit on my laptop and report all day. It's nice to get out and talk to the folks who are
so nice,
making it possible for me to
So
sit on my
glad
laptop
to-
and report all day.
So glad to have you in here. Lisa Schmeiser, editor-in-chief at nojitter.com. And Mr. Glenn Fleischman, shift happened big time. Tell us about it.
Well, Marcin Wishari wrote a book about keyboards that turned out to be 260,000 words and 1,216 pages. And we said, I wonder if people will like this book. Would they want to pay, say, $150 for it? Turned out over 4,000 people said, sure. So our Kickstarter campaign, we'd hoped to sell like 2,500 copies. We were aiming for 350. Ultimately, we thought that would be a great outcome, and finished at $750,000 plus some change. We're going to print maybe 6,000 copies. I don't know. We have 4,500 or so committed. We'll probably sell them all out. It's a big book, and as part of it, he and I are going to go to Maine, where the book's being printed at a family-run, multi-generation business, and be on press for 6 days to 10 days. 18 hours a day, 16 hours a day, working with press people and making sure it comes out right. So
It's a
that's
beautiful
gonna be
book.
fun,
You sent me the preprint and it was just gorgeous. And I love the images. So many great images, including this one, a 1987 parade in East Berlin of a socialist computer, the VEB Robotron PC, and the young women in their bunny suits drawing them along on wagons down the street of East Berlin. The great success of the Soviet Republic.
People who love the Sinclair ZX series, those the 80 and 81. If you like,
those are
typewriters,
those chiclet keyboards.
If you like the IBM, the classic IBM, I'm forgetting the model numbers. The Model M, I think, is the best one. Selectrics, it's a lot of models, but really the fun part about working on it with Marcin was that he had great stories, and kind of my role as editor of this project was to make sure the stories came forward, right? Is so that this is a story-led thing. And so you'll find out about people throwing typewriters to hide crimes into rivers, and like the keys that are illegal to type or used to be in Turkey because they could be used with Kurdish words. And it's like typewriters and keyboards are all tied up with geopolitical events, technology advances, of course, but always comes back to people. And it's got a good chapter in there about sort of the role of women in the workplace and how keyboards sort of made a place for women, and then also became a economic disparity thing. I know this from the typesetting world is hot metal type was really controlled by men. It was almost all men unions. And when phototype came around, they would hire women to do it because it was a different kind of job, and they'd pay them half as much. So this book covers that kind of issue, as well as sort of the more fun things, like people thinking when typewriters were invented, no one thought you could touch type. Like, of course, you would never have had any experience with that because no device existed that you would ever touch. There were no reason to do it. So it was seen as both impossible and undesirable. And I just think that's it's a fun chapter on touch typing.
The Kickstarter's over, but it's not too late to pre-order. But do it quickly because I know you're going to sell out.
Finite number of copies that we can print.
Yeah, and this is it, right? You're not going to do a second press run.
It's so much work. It's plausible. I don't think we'll do another edition this big because it's so big, and so it's got a slipcase, and the third volume, you can stretch goals, so it's got a third volume of extras. The index is going to be like 60 pages. If we're lucky, it'll be that short. So this was reaching for the brass ring, and
you did it.
First book he wrote, and it's really good.
Most successful technology Kickstarter of all time. Technology book.
Yeah,
Kickstarter of all time. Well done.
We are very happy. Thank you for your support of it.
Yeah. Glenn.fun with 2 N's. You'll find them all over the place and on many of our shows, but also in the Incomparable and the other 6 Colors stuff. And hey, it's great to have all 3 of you. What a wonderful show. Really appreciate your time. Thanks to all of you for joining us. We do Twit on Sunday afternoons, 2 p.m. Pacific, 5 p.m. Eastern. That's a little bit different now because we are in summertime, darn it. Now I have to do some math. That's 2100 UTC. The live stream is at twit.tv/live. There's live audio and video. There's a chat room, IRC chat room at irc.twit.tv. There's the Discord if you're in the club. After the fact, you can get copies of the show at our website, twit.tv. There's a YouTube channel dedicated to This Week in Tech. And, of course, you can subscribe in your favorite podcast application. And I hope you will. I thank you for your support. Thank you for being here. We've been doing this 18 years. Kind of hard to believe. Our anniversary is next month. We're going to have a little party. But for now, after 18 years, I'm still saying it. Another twit is in the can.
It's amazing.
Doing the twit. All right. Doing the twit, baby. Doing the twit. All right. Doing the twit.
So, we couldn't get Jason on until the end, but I'm glad to get him on now. Jason Calacanis joins us. His hair, as far as I can tell, is not on fire. You put out the flames.
Yes.
You were
nice to see you, old friend.
It's great to see you, buddy. Welcome back. I see you were in Japan.
Did a little Japan trip. You've been many times, I'm
Love
sure.
Japan. Yeah, I was watching
so great.
your All-In podcast, and you made me very hungry. You made me very hungry. Hey, wait a minute. I got to ask you something, first of all.
Yes, ask me everything. Yes.
How is it All-In
catch-up time
gets a special glyph on Twitter?
Oh.
You guys got some in there or something like that?
My friend liked the product so much he bought the company.
Yeah,
as they say in the business.
And if your friend owns the company, you could get a plug for your podcast in there. Yeah,
sure.
Why not?
It's that actually what you're talking about is there's a little icon that goes next to your verified badge.
Yeah.
So if you had people like if I was or if you had like all the Twit shows, you could put the Twit logo, and then you could affiliate all the Twit hosts.
How much is that going to cost me?
I think they're going to have some like enterprise thing. And I think they announced it's going to be like a couple of bucks per person per month.
Oh, that's not bad.
And I don't think it's going to be that bad. And I think it will have some features that make it really interesting to.
It's actually a good idea. Yeah.
Yeah. And so what will happen is if you actually click on the All-In icon there, and David Sachs architected a lot of this.
Who is going to be the new CEO, right? He's going to be the guy running Twitter.
No, definitely not. Definitely not. I don't think
that was the scuttlebutt.
You know, there was a lot of palace intrigue around Elon and Twitter. Obviously, is like two of the most popular topics in the world. So like people were just running with things. But you know, I've known Elon for 20 years. Did he ever come up? I think he might have come up to Petaluma at some point.
No, when I was
I came up with my
I bought a Model X, you said you were going to help me out. Get me
I was trying to get him up
get
there.
me
It
up on the
almost happened
list.
back in the day.
It's okay.
Yeah.
It worked out fine.
But you know, what's interesting about it is when you click it, it's going to let you put a tab next to your replies column. So you'll be able to do like interesting functionality with it. Like it'd almost be like a list. So I think if you hit
I see, by the way, all the other hosts are now recommended, which is awesome.
Yes.
And then if I click on it, I get the podcast itself.
But then look at the second tab on the All-Ins handle. It says affiliates.
Oh.
So you would be able to change that word, but it shows the four of us there. And so this would mean on the Twit show, or if you did it on, you know, your Mac show, whatever show, security show, you would be able to then see who the hosts were, or maybe you put the guests there or regular guests.
Cool.
So
that's actually a great idea. I think
it'll drive a lot of followers.
I'm kind of off Twitter these days, but still.
You've always had an interesting relationship with it, right? Because it was your name.
Yeah.
Yes.
Sure, a little challenge.
Well, Chief Twit, right? Like, you're the Chief Twit.
By the way,
15 years ago.
Can I say, I figured it was you that told Elon, you can't be the Chief Twit. Leo's already the Chief Twit. Did you tell him that?
I did not talk about anything I talk about with Elon because it becomes like literally
it's a thing. I understand.
It's crazy, like Elon for clicks, because I was playing with the Twitter Spaces, and you know we follow each other whatever on Twitter. So he follows me. He jumps in my Spaces when I was testing my microphone, and then there's 20 stories. Elon and Jason are doing fart noises with the sound panel. At 2 a.m. And I'm like, it's just, I can't even test my microphone without
it's good to have friends who stay up as late as you do.
It is.
So
but anyway,
the reason I wanted to get you in here is Silicon Valley Bank.
Of course. Yep.
Do you have money in Silicon Valley Bank?
Yeah. So let me give all the disclaimers. I have no money in Silicon Valley Bank. I have no money in First Republic. I have no short position. I don't own either of the stocks. Everything I've been talking about is strictly for three reasons. One, to let the public know what I'm seeing from the inside, because I am an angel investor. I'm on the board of a lot of companies with exposure. Number two, I want to influence the government to do the right thing and make sure that this constituency, startups and the people who work at them, are heard. And number three, I really want to see them take action, because I had a real concern that it would be 3 or 4 banks. And I can explain why, but I'll let you direct the interview.
Well, the good news is
I'm not talking my book.
And the good news is, well, that's important. There's no conflict of interest. But the good news is, I think you won, because an hour and a half ago, a joint statement from the Treasury, Federal Reserve, and FDIC said that all depositors, even those who had deposits bigger than the $250,000 insured, will have their access to all of their money tomorrow.
Yes.
That means the government's going to back it all. They're going to back it all.
And it's important, I think, Leo, for the public to understand that this isn't a bailout of the Silicon Valley Bank equity holders, the shareholders, the board, or the
so if you had
leadership
stock,
there,
or you were a board member, or you were an owner, you're not getting made whole. That's not what this is about.
No,
this is the depositors. And most importantly, companies like Roku, half of their cash was at SVB.
Correct.
They can now make payroll tomorrow.
Yeah, I mean, this is the reason I was in an actual panic last night, is because I'll tell you the sequence of events that I saw up close and personal. Now, you know me as a journalist and a media creator, blogger, podcaster. But for the last decade, for people who don't know, I started angel investing in companies. I invested in 350 of them. Some of them got large. Some of them would receive large amounts of capital and put it in a place like Silicon Valley Bank, First Republic, et cetera. And these are great banks. They're very customer focused, as you talked about on Twit. And they've built a great relationship with the wineries and startups and venture firms. And what I saw was literally on Thursday, Leo, people started spreading rumors, hey, you got to get your money out of Silicon Valley Bank. People immediately start running for the exits.
Now, actually, this might have started earlier, because Financial Times on the 28th of February had a piece saying this strategy, this bank, it might be in trouble because they are long on all these treasuries. And the interest rates on them are single digit or less, And as interest rates go up, as the Fed raises interest rates, those holdings become less and less valuable. They're really problematic.
If you have to sell them. Yeah, if you have to sell them, you have to sell them at a discount.
And they did have to sell them because their cash position was so low, right?
Correct.
Their reserves weren't high
enough. When people saw this.
Yeah.
Correct. Now, if they had held them to maturity, these government things, they'd be fine.
Yeah.
Right. So
but the maturity is in some cases 10 years.
Correct. So what's happening here is people, I think, didn't understand what's happening, saying, "Oh, we're going to bail out a bunch of Silicon Valley, D-bags or whatever,
billionaires,
billionaires." Right? That's not what's happening here. And to be clear, people did see this happening, and I think Fred Wilson at Union Square Ventures, or the team at Union Square Ventures, let people know about it, in maybe even December, January. So people had seen this coming, but you never think that everybody's going to pull their money out of a bank at once. Once people realized, hey, I have all my eggs in one basket and I'm not going to make payroll, whether it's Roku or I have companies that have 20 people, right? And have $2 million in the bank.
There's tiny companies. I saw a tweet from a woman who says, hey, I drive a Honda Odyssey. I got 25 employees. I'm not going to make payroll. Because as a startup, and this makes sense, you're a startup, you get a big cash infusion in your A round, but you don't spend it right away. That's your runway. So you're gonna put it somewhere that it's liquid, so you can continue to make payroll. The problem is it's more than $250,000.
Right. And so what then happened so there were people saw this, and then some savvy people, in fact, the smartest people I've ever met in my career, and as you and I experience, we get to meet entrepreneurs, capitalists, media people who are some of the smartest people on the planet. Just, really smart people. And I'm watching the smartest people I know on the group chats moving their money out of certain banks at a really fast pace. And I'm like, wow, I'm actually witnessing a bank run here, because you would have a discussion.
This was Thursday morning?
This is Thursday, Thursday, morning into afternoon. And I was literally in a board meeting Thursday afternoon, and which had a Silicon Valley Bank customer.
Some of your portfolio have big accounts there. Did you advise your portfolio to people to do this, to withdraw?
Yeah, well, I'll tell you exactly what happened. We're like literally in a board meeting, or I'm having other conversations, and you'd have one person say, Silicon Valley Bank's not going to go under. It's a top 20 bank. And if it did, the government would backstop it. Then you had another group of people who were like, well, maybe take half our money out. And then, founders are asking me, and I'm like, well, we could take the money out, and then if there isn't an issue, we could put it back in.
Right.
Right. And that was my advice. Now
that makes sense. Better safe than sorry, right?
But that's what I thought, because I was like, I'm seeing, and this is why I was tweeting in all caps last night, because I felt like people were ignoring something.
Your hair was on fire.
My hair was on fire because I'll tell you why, Leo. When you watch a whole swath of companies not be able to get their cash out, and then everybody on the weekend pass the hat and say, how do we make payroll Monday?
Yeah.
And I was working with maybe 6 or 7 companies that were in the process of doing this, and I'm giving literally $100,000, $200,000 short-term loans to these companies, arranging for them to be wired on Monday. It was very stressful. And
so you were taking money out of your pocket for these companies to keep them solvent?
Exactly. Yes.
Wow.
I would probably have put at least $1 million out, and I'm a seed investor. And so I'm like, oh my God. Because then what I saw happen was the second order effects, the third order effects. Then I see, oh, wait a second. This payment processor who does people's payroll just missed all the payrolls because
Ripple.
I won't say which company or anything like that.
Ripple.
Okay.
Yeah.
You can say it.
Yeah.
I don't want to,
Well, no, they tweeted
did the right
about
thing.
it.
He did.
He tweeted about it. Yeah.
Yeah. So all of a sudden, payrolls are being missed before Silicon Valley Bank.
So
is
people
officially,
understand this, we use a POE as well. We don't do our payroll. We have an independent third party. We transfer money when it's payday. We transfer a big chunk of money into their holding. They disperse the checks. So Ripple had all this cash, and suddenly they can't access it. They can't pay these payrolls. And a lot of small businesses, as you pointed out, a lot of Main Street businesses. This isn't just billionaires or VCs or startups. This is normal people who aren't going to get paid on money.
A developer,
on Monday.
A PR person. It's just rank and file. And then what happened was, well, their whole system, the rails were built on Silicon Valley Bank's API. So now they got to rip that out and put another bank's API in. Obviously, that takes time. Then as people were moving their money out of one bank into another, or many others, I saw another series of very savvy people say, you know what? This bank is too small and this bank is too small. I'm taking my money out of those other two, and then I'm putting it in one of the top 4 banks. So then it all just crystallized for me on Saturday. I'm like, oh my God, there are 3 bank runs going on that I know about. People are moving money out of multiple banks, the regional banks, not in the top 10, let's say, or top 4 really. And so when I saw that, I was like, okay, there's a bank run occurring.
Do you blame
need to know
Peter
about
Thiel? He was the first to tell his founder funds portfolio companies, get out.
If you, this is I think this is called the prisoner's dilemma in, the sort of philosophy and logical
It is prisoner's dilemma, isn't it? That's right.
It's like either I rat you out or you rat me out.
It's game theory.
One of us is it's game theory. We're in game theory territory. So I don't blame anybody who had to take the money out to hit payroll. But we also know what happens if everybody takes their money to the bank, because we've all seen It's a Wonderful Life 50 times.
Yeah, we all know what a bank run is. Thanks to
like,
Jimmy
how much do you need to
Stewart.
get through the week?
Yeah, right. Here's your $17.50. So Parker Conrad, who it's Rippling, by the way, who is the founder of Rippling, was very, actually, I give him a lot of credit. He tweeted it. It was very public. He explained what happened. And now, by the way, he and Rippling are very pleased that the FDIC, the Federal Reserve, and the Treasury is going to back those deposits, because those payrolls will get paid on Monday. The money has been freed up. So that's huge.
And that's what we all wanted, because here's what happens in a bank run. The people who are insiders see it happening, and you know who doesn't see it happening? This is what I found was profoundly unfair. I was at a dinner party Saturday night with 4 couples, and 2 of the couples were in venture capital and 2 weren't. And the 2 who didn't, they had accounts at regional banks, and they're like, can you explain to me what's going on? I saw a headline and I'm like, oh my God, these small business owners, and one of them was in construction, one of them's in fitness, one of them was something else. They had bank accounts and they didn't even know this was happening. So they're going to be the suckers at the table who didn't take their money out. And then the insiders took all their money out.
But let's be clear. No one should take any money out now.
They don't need to at this point. No, it's over. And that's what we were lobbying. And there was I wasn't involved in the inside lobbying. I wasn't talking directly. I just said, you know what? I got a couple of 100,000 followers on Twitter. I'm going to be very public about this. And I said, it's on Monday. The logic, what's going to happen? Because I'm seeing it increase. The people at the dinner party were saying, hey, I'm going to the bank. And then I saw the pictures at First Republic Bank in Brentwood.
Yeah.
Yeah. And I'm like, okay, I live there in Brentwood, right by that one on San Vicente. The parking lot was always empty there. They never had a line. It was like, those people online are going to be non-tech people. They're civilians. They're not venture capitalists. These are normal folk. And in some cases, normal folk are under 250. In some cases, they're over it. It wouldn't be uncommon for a small business owner who owned let's say a medical practice in LA. And I believe those are the people who are probably online. I don't know that, but there were multiple people who went to that bank and confirmed that. And I think on Monday, if they hadn't done this, it would have been 20 banks this week. Because I don't know if you saw the announcement, but another bank in New York went under.
That's right. Signature
and they
Bank.
Took ownership.
Yeah.
I wasn't even aware of that one. I'm talking about other banks.
That was close today. Yeah.
So if 2 banks in 48 hours, Leo, what would have happened on Monday when they reopened? I think it would have been another 2008. So the government did absolutely the right thing here.
It was certainly the risk. Do you know if they found a buyer? The auction was ended today.
The back channel I'm hearing is that it's going to be announced in the next hour. And I don't know who it could possibly be, but the other back channel that's going on is we've tried to have, I don't you remember all these hearings and stuff like that, Elizabeth Warren, yada, yada. The top couple of banks are too powerful. So we need to have more banks.
We don't want more concentration.
The top 4,
that's right.
Exactly.
We don't want JP Morgan to buy it because it just concentrates it.
Correct. And so what's happening now is there's that as a factor. So those big 4 probably do want to buy it and get all those relationships in Silicon Valley. I think they want to probably get it to merge or be part of a First Republic or a smaller one. So they're probably trying to make one of those bids win. And that mechanically could be complicated. And I think there was another thing, which is we live in a very polarized time. I can tell you that as a polarizing figure, like some tweet guest.
It's all your fault. It's your fault.
It kind of is. I agree. Me or Trump. One or the other, Leo. I'm not sure who to blame.
You know what? It's funny because I love you, Jason. I understand.
I love you too.
I understand there were some people who did not want to be on with you, and I understand that, and I honored that. But I love you, and I also know that you can stir the pot.
Yes.
But I think in your heart you are a good person, and I know from a fact you're a deep person. So and I was really glad I could get you on. I got one more question for you.
Yes, sure.
Do you have money on the Oscars? Who's the best picture winner this year?
Okay, this is an important question.
Yes.
I think there were two films that I would see again multiple times that are extraordinary. The first is Top Gun, and the second is Tar. These two
I
films
love
are
Tar.
both
I'm voting for Tar.
And Tar is my pick. Yes.
Yeah, I know Everything Everywhere All at Once will win, but I thought Tar was amazing. And
Tar's
I watched
like a
it several
film-
times. Todd Field is an amazing director, but there is a deep
Amazing.
picture, and there's a lot going on that you don't get on the first view.
No, I've watched it twice too, and
Yeah.
it is an extraordinary film for our time. I think it's one of those films that like we'll appreciate in 10 years, or 5 or 10 years. And Everything All at Once is good. The Whale was good. Top Gun I would see over and over again is fantastic, very entertaining.
Yeah,
but
really
Tar
fun.
is an important.
I
Tar is an
agree.
important film.
Yeah.
That you and I would talk for 2 hours after seeing
Absolutely.
it over a meal.
Absolutely.
Based on the nuance in that film. I highly recommend people see it and give it a shot. Maybe it's a 2-sitting kind of thing because it is 3 hours, but the performance also is the best performance.
She's amazing. She should definitely win Best Actor.
Unbelievable. All right, well, great to catch up, brother.
Jason, I thank you so much.
Yes.
I'm glad I could get you on. I think it's important to hear all perspectives, and it's really important to hear from somebody on the ground, and you are definitely there in the middle of this, and I'm glad you don't have to write those big checks to your portfolio companies.
Me too.
Yeah.
That was going to be rough.
Yeah.
There's going to be a lot of wires going out.
Yeah,
in
I think it's
24
the right
hours.
thing to do. It costs the taxpayers nothing. There's no loss here. The bank, in fact, there was no fraud. It was just a simple liquidity crisis, and the government can solve that without any danger to anybody else and solve a big problem.
Thank the Lord. All right, Leo. I'll
All
catch
in
up with you soon.
podcast. That's Jason's. He's good. And this week in
All right,
startups,
brother.
you're still doing
Yeah,
that.
still chugging along.
And you got
Of
the
course,
great Molly
absolutely.
Wood working with you. God bless her.
Fantastic.
Yeah.
Yeah, she's the best. Okay.
Thanks, Jason.
Talk to
See you
soon,
later.
brother.
Bye-bye.
Cheers now. Bye.